everyone, a very good morning to you all. Welcome to the second lecture of Performance Management paper of ACCA. I hope all of you are doing well. We will continue our discussion from the last chapter, that is chapter number 1. If you have any doubts, please feel free to share it. We'll address it right away. Or else, let's just begin. Give me one moment as I bring up the deck. So I have one clarification to make. One second. So I have one clarification to make. I was speaking to the admin team here. So the books, they are available in sets of practice kit and the workbook. So kindly kindly purchase the workbooks as the practice as the study materials for your course. Okay. So I hope you would have spoken to Sandeep about it. Please get back to him. It will be available in sets, so you'll have to get hold of both of them. And there are some practice questions also available in the workbook, which you can do as an extra activity. All right. So on that note, let's begin our chapter. So till yesterday, we had covered few important terminologies like internet, intranet, extranet, right? So all of those have been covered. Cloud computing, very, very important terminology that they can be public, they can be private. What are the benefits? So all of these being covered. Now let's start off with a new topic, and that is how do we establish controls over information? Yeah. So what do we understand by control? So what are the things you should ensure that the information that we are generating in a company, it is suitable, it is feasible, there is no duplicacy, there is consistency. So all of these important factors are to be ensured when we are generating information. Now, this topic is divided into several parts. The first part is controls over generating internal information and routine reports. What do you understand by routine reports? What do we understand by routine reports? Can you tell me, just my logical experience, what it should be? Routine reports. So if any one of you is working or have someone who is working, so you would know that there are people, there are work where there is regularly requirement of a report. Like every morning, there would be a report that gets published. Okay, so that is routine, regular report. Right? Maybe daily, maybe weekly, maybe monthly. So these are routine. Every period of time requires this report to be generated. Now, controls over generating internal information. All right. So, what we're talking about, generating the information for internal consumption. So, what we have to do to ensure that the data is relevant, it is feasible, there is no duplicacy. Let us look at these line items. These are the controls which we need to place on this information. First is carry out a cost-benefit analysis. What is a cost-benefit analysis? So, whenever you take any decision, what do? You see now how much cost I am incurring versus what is the benefit I'm going to get by incurring that cost. Correct? So, that is a cost-benefit analysis. You take up that project only if the cost-benefit analysis gives you positive results. It means that the benefits exceed the cost. Benefits that you are deriving out of incurring a certain cost is more than the cost incurred through it. So we need to carry out a cost benefit analysis. How easy is the report to prepare compared with the usefulness of the decisions that can be taken as a result of its production? So so let's say if you're working in a company and I give you a task that you have to do this daily, okay? And daily you are consuming about 2 hours on it. And the usefulness which I am getting out of it, it is very limited. It doesn't give me much of an insight or some important decision to take, but it's taking 2 hours of your daily time. So out of, let's say, 8 hours you work, 1/4 of the time you engage yourself with a lot of focus and take 2 hours to complete this report, which I use or may not use because it's not that important. So how easy is the report to prepare compared with the usefulness of the decisions that can be taken as a result of its production? This is something which needs to be taken care of when we are generating these routine reports. Let's say there was a practice established 2 years ago that we will run this report daily. Sometimes it happens when the traditions get followed without any logic. In the same way it works in corporates also, and I've practically seen that. Someone had said that we will be doing this, and it gets passed on and on. No one questions why we are doing it, or is there any way to improve it. That is where we as finance professionals have to bring in the goodness in saving of time, because that is also a very important criteria, that you should be saving time for yourself and your team. So that tradition has been going on to run the report daily. No one is asking for its usefulness. That is wrong. This is a control which needs to be set while generating internal information in routine reports. Okay. The cost of preparing the report will in part be determined by who is preparing it. Now let us say the salary of an executive person and the salary of a senior manager, obviously there would be a difference, and there would be a time value to his, time value in the work which he is putting in. So this executive is preparing the information, he is paid, let us say 50,000 per month. So per hour some rate is there. Let us say, just for example, easy reference, 1,000 rupees per hour rate it comes out to be. And for the senior manager, he is getting a salary of 2,50,000. Alright, so his per hour rate would be 5,000, keeping parity. And 2 hours it takes. So just to prepare it daily, 10,000 rupees gets, it becomes the cost. If the senior manager is required to prepare it, and the executive, he is taking 1,000 to 2,000 rupees per day is the cost for generating the report. So who is preparing the report is also very important. If the report is so complicated that the executive cannot do it and the senior manager has to do it, definitely the company is not being conscious enough to see the usefulness of the report. Is it really that worthy? That is the control that needs to be set. That who is it being prepared by, right? So the cost can be reduced if the preparation can be delegated by a director to a junior member of staff. Okay. So these are the important aspects we need to keep in mind. What have we discussed? That every time a routine report is being generated, then we should be knowing its cost benefit analysis. That what is the benefit we are getting out of the cost which is incurred to prepare the report. So cost which is incurred to prepare the report is also dependent on who is performing the work behind it, whether it is the senior director or like a junior staff or an executive person. So this is very important, and it should be evaluated from time to time. It should not be like followed as a tradition. Next, a trial preparation process should be carried out and a prototype prepared. Users should be asked to confirm that the requirements will be met. So this is, talking about a scenario where a routine report is being newly developed. So there has come an ask that this report we need on a daily basis. So what you should do in that case, prepare a trial report, just like a sample report, and its prototype, like a sample You should prepare that sample and then ask the users whether all your requirements are being met through this report or not. Okay. So when there is a new requirement coming in for a routine report, it should be checked whether that report is fulfilling the needs of all the users who will be needing it. Okay. Next, a consistent format and consistent definitions should be used to ensure that reporting is accurate and the chance of misinterpretation is minimized. So I'll give you an example here. So let us say we have monthly reviews with our CFO in the company. So 1 month I present in a certain way. Another month I present in a different way. And then the next month I present in a third different type of a way. So every monthly report which we have to give to the CFO, we are preparing in different manners. Is that a right approach? Once I am reporting revenue, cost and then the margin. Once I'm reporting only the margin. Once I'm going into details as to, how many number of units were there, what was the, salary cost, what was this cost, what all, and getting into a lot of details. So basically, I have not been able to bring consistency in my reports. So CFO would keep on wondering what this girl keeps doing. So that is not right. You need to be consistent in routine reports. So routine activities, obviously there is expectation of consistency. A consistent format and consistent definitions should be used to ensure that reporting is accurate and not misinterpreted. Then the CFO might start to think, whenever the results are bad, she is trying to hide some information. When the results are good, she is trying to give extra information. So that type of misinterpretation can come. Or maybe while he is reading the report, he is used to a certain format. Now I keep on changing it. So he might misinterpret it because do not expect the senior managers, senior leaders to have as much time. Okay. So a consistent format and consistent definitions should be used to ensure that reporting is accurate and the chance of misinterpretation is minimized. Standard house styles will ensure that time is not wasted by managers, staff and report writers on designing alternative layouts, different layout. So there should be a standard style of preparing the report which should be decided internally, that what is the expectation. The originator of the report should clearly be identified so that queries can be dealt with quickly. What do you understand by the originator of the report? Who do you think is the originator of a report? Who do you think would be an originator? Exactly, the person who is preparing the report. And what does it say? The originator or the person who is preparing it should be identified. So prepared by. So you are in the skills level currently in strategic professional level. There are report preparation questions in which I tell my students, always write at top, prepared by dash, as per the question. So this is very important in a corporate setup because if someone is publishing a report and no one knows who actually prepared it, and if they have a doubt or query on something which is mentioned in the report or some extra help which they want from it, then whom should they reach out to? That will lead to ambiguity in the company. So the originator of the report should be identified. Okay. In the report itself, prepared by whom? The report should clearly set out limits to the action that users can take as a result of the information in the report. Okay. What is it saying? The report should clearly set out limits to the action. This will ensure that organization's system of responsibilities is maintained. Let's read it again. It's a little difficult one. Read it again. The report should clearly set out limits to the actions that users can take as a result of the information in the report. Giving you example for it. So in some reports now, it is mentioned that to be used for internal consumption only, strictly confidential. So what it is trying to say is that there is a limitation. Maybe we cannot disclose it. You cannot just go out in the public and quote these numbers. Okay? It should clearly set out the limits to the action. Or maybe you can write not for further circulation. If I have sent a report to you, only you are the addressee to which. You will not start circulating it to your team or XYZ. So the report should clearly set out the limits to the action that users can take as a result of the information in the. The usefulness of the report should be assessed on a periodic basis to ensure that its production is necessary. Of course, as I also partially covered in point A, that means the usefulness, whether there is a utility out of the report, that should be continuously assessed. It's not like someone said the tradition and it is being continued. Okay, so these are the controls over generating internal information in routine reports. Please take a look and let me know if it is fine. Have a look at the slide and let me know if it is fine. Any doubts if you have? Can I move to the next one? All clear. Okay, then let's move to the next one. And the next one is controls over generating internal information in ad hoc reports. Okay, what do you understand by ad hoc? First one was what? Routine reports. This is ad hoc reports, meaning it is not something regularly done. This report is prepared as and when the request comes for it. It is ad hoc in nature. There are no timelines which are to be adhered to while this report is being prepared. So again, here also you should carry out a cost-benefit analysis. Although it is ad hoc in nature, whether there is a benefit out of this report, that needs to be evaluated. So carry out a cost-benefit analysis as above. Next, ensure that the required information does not already exist in another format. Okay? So I'll tell you what happens now. Sometimes there will be requests coming into you that prepare this report on an urgent basis. This is required by the senior most leader in the company, and so on and so forth. In this haste, you forget that this information is already available somewhere else. So when you are preparing ad hoc requests, ad hoc reports, then you should check whether this information is already available somewhere else. In some other format which you can fine tune as per the request which has come in newly. So that is the second control that you can keep when you are generating ad hoc reports. Okay. Next, brief the report writer so that only the relevant information is provided. So you give the instructions carefully to the report preparer or the originator that only the relevant information is provided in the report. Okay. Here also ensure that the originator is clearly identified. And lastly, ensure that report writers have access to the most up-to-date information. Okay, that they should know what that up-to-date information is, and only that is being incorporated in this report. These are the controls. Now, I did not get this question, ma'am. Do we need to memorize these controls? What do you think? Do you need to memorize these controls which we are learning? No, you don't need to. Very frankly, you will not be asked to, list down the controls over generating internal information in regular reports or in ad hoc reports. There will not be questions like that. Questions could be, below are the controls over generating internal information in ad hoc reports. Select the, as per the scenario, which control is applicable to the scenario. So you will be given a scenario, you'll have to select the relevant control which is applicable in this scenario. Okay. So those are the type of questions which come. So you need to be aware what each one of them mean. Like, what is the cost benefit analysis? That the usefulness which we are getting out of the report is more than the cost we incur to prepare it. Second is check whether some duplicate information is already available. You need to avoid duplicacy, right? Third is that only the relevant information is provided, because there should not be information overload in a report. Because if you are overloading information in a report, it tends to become irrelevant. No one will find the interest and time to read it. Next is originator. Originator is who is circulating that report. So it should be clearly mentioned. It should not come like, anonymous, prepared by anonymous. So that should not be the case. And lastly, the information contained in the report should be up to date, because it is an ad hoc report, no? So if it is not available, if the up to date information is not available, then it should be called out that the content in this report is updated till, let us say, April 2023. So we are in June. So most recent data hasn't come up till now, and the data which is there in this report is up till April 23. So that needs to be put as an asterisk below. I hope this is clear. Next is controls over distributing. All this while we were talking about generating the information. Now we are talking about distributing the information. Okay. So what are the controls that needs to be followed? Number one, procedure manual for standard reports, like a routine report, you can say. Procedure manual. So indicates what standard reports should be issued and when. There is an SOP in companies, standard operating procedures. If it is in properly established company, you will have that. So if you take on the role in that company after someone else has left that position, you will be given with an SOP that these all things you are supposed to do. These are the standard operating procedures of a person at this role. So it should indicate that these are the standard reports which you are required to prepare and circulate. So there should be a procedure manual which indicates which all standard reports have to be issued and when. Okay. Sets out the format of standard reports. So the format of a standard report should also be clearly mentioned, that these are the contents which have to be placed in the report. Next, makes clear who should receive the standard report. So if a particular report is meant for just certain manager grade, it should reach only up to that grade. So it should not be like you have joined newly and you will just publish the report to everyone in the company. To whom the report should be given, that should be clearly set out in that procedure manual for standard reports. So what have we covered? What should be the content? When should it be issued? Then the format and who should receive the report. Next, indicates whether reports should be shredded or just put in a recycle bin. Whether you need to, shred the report, just break. People, they use shredder machines where if you put the papers, they get shredded into small papers and no one can make anything out of it. So it should also indicate if a report is highly confidential and after its purpose has been fulfilled, it needs to be shredded, or if it can be simply put in the dustbin. Okay. Next is makes clear what information should be regarded as highly confidential. Like I was telling limit the person to whom it should reach out. So if the report is supposed to be confidential, it should be called out that it is confidential. Okay. So these are the controls over distributing information which should be covered in a procedural manual for standard reports. Clear? I hope this one is clear. Then if yes, then we'll move to the next topic. Is it fine? Okay. So this one is other controls. So we were earlier talking about standard reports, how it should be procedurally clear. Now, what are the other controls which needs to be there? Payroll and personal information should be kept in a locked cabinet or be protected by a password access on a computer system. You tell me, what does this line convey? Read it again and tell me, what does this line convey? What do you think this line means? Read it again and tell me. See, there is a reason why it is said that salaries in a company, they are kept confidential. Very good, Meet. And Gaurav, you have rightly covered it. That the salary of the personnel, of the staff in a company, it is kept confidential. Why? Because see what happens, there could be asks for higher salary. Mr. XYZ is getting the salary. I'm also doing the same thing because in the eyes of the person who is doing the work, he is the best. He is putting in his best. So he also feels that if he is getting this much salary, even I should get that much salary. So there are a lot of reasons why salaries in a company are kept confidential. So that is what this says. Because it is also a regular work only, payroll information. So payroll and personal information and also the personal details of an employee. So maybe his next of kin contact or the emergency contact, his address details, they should all be kept confidential. It should be it should be, if it is a physical form, you're maintaining the data, then it should be kept in a locked cabinet or it should be protected by a password if it is there on a computer. This is a control which needs to be there on the information. Next, all employees should be contractually required not to divulge confidential information. There are salary agreements, salary contracts which an employee is supposed to sign. 99% of the contracts will mention that if you are holding some confidential information, you cannot disclose it to anyone. Okay, so I'll give you an example. There was a time a new product launch was happening. Okay, so all of the people who were associated with that new product launch, okay, it was kept confidential till the very last moment in the overall company what that product is. Only certain group of people were involved in it. They all signed a personal guarantee, like a personal guarantee that we will keep the launch of this product confidential until it is made public by the company. Okay, so that is the level of control over information which is maintained by companies. So first is you are bound by your salary contract. Others could be specific to the situation, that a new product launch is happening. You are associated in its work good, but you cannot disclose it even to your family members that I'm working on a project like that. Next, the internal mail system should make use of private and confidential stamps. Okay, this is pretty common. So if you are writing an email that is confidential, so you call it out at top, private and confidential. If you're talking about physical items, sometimes you receive post letters, envelopes which have a stamp on top of it that it is private and confidential. You would have seen that. So this is to maintain the confidentiality of the information. This control needs to be there, that it should be properly stamped and this is private and confidential in nature. Next, an appropriate email policy should be set up. Email, what is the best email policy? Let's have a look at the sub points. First, email is best suited for short messages rather than detailed operational problems. Detailed operational problems should be included in procedural manuals. Okay, emails, they should be short, addressing a few points. You should not be writing essays in emails. Okay. Next is email provides a relatively permanent means of communication which may be undesirable for confidential or off the record exchanges. This is a mantra for corporate life. If something can be closed on a phone call, do not write emails about it. Emails should only be written when you need to just formalize it. All the conversations or the negotiations which happen, maybe that you can keep on call. Only the last stage where you want to formally keep this, that we discussed all of it, and which can be referenced by anyone with a transparent eye, that this doesn't seem anything ambiguity is there or some sort of a manipulation is there. That should never get conveyed in an email. Email should always be kept as if any person and any rational person is reading, they should not get any wrong hints out of it that there's some manipulation which has happened behind it. You might exchange some things, you might exchange confidential things over calls. Emails should be only documenting the final thing, only if it is something which is non-confidential. Confidential information should always be communicated by mouth, not by emails, because emails can be stored and referenced till infinity. You can dig down old emails also, I'm sure you are aware about it. So if it is a confidential information, use any mode other than emails. All right. Next, staff may suffer from information overload. Okay, so anyone, if you get a doubt now in between while I'm talking, please feel free to put it in the chat box. It's not like you have to wait for me to ask you if you have a doubt. If you have a doubt, just put it in the chat box. Next is staff may suffer from information overload. So if you put in a lot of things in an email, then the people who are reading it, they not understand. So if something is very detailed and you're communicating it for the first time, it should normally be done in a meeting. You explain all of the things, and then to formalize it, you can write an email so that the people who are reading it already have some context about it. So if you're just putting everything in an email, the minutest of details, then it will lead to information overload and the staff will not understand it. Okay. Next is, it is uncomfortable to read more than a full screen of information. Longer messages will either not be read properly or will be printed out, in which case they may just as well have been circulated in hard copy form. So what it is saying is, like I mentioned yesterday, remember someone asked me, ma'am, should I take printout of the notes? I said something that if you're comfortable reading on the screen, then good, otherwise you can take a printout. That is exactly what this is saying. That people find it difficult to keep on reading it on the screen. They are used to, as humans, reading it on paper. So that's what it is saying, that if there are longer messages, you could have yourself printed it in and circulated it. There was no need to put it in physical form, in email forms for others to print it out. So it is uncomfortable to read more than a full screen of information. One screen, two screen you can read, but more than that, it becomes a little difficult to retain it or retain the information and understand it. So that is why what it says, that if it is very long, you could actually print the details and send it across. So these are the controls which need to be put in place with respect to emails. Okay. Next control is with respect to physical security of the computer. Okay. So I'll tell you a very important lesson I got in while I was working. So whenever we go out for corporate dinners, when we're going out with the team dinners, team lunches, and we're going by our own car and we hand over the car to valet for parking. You know what? We always carry our laptop bags inside the restaurant. We never keep it in the car. Why? That is because that is as per company's policy that you are responsible for the physical safety of the laptops which have been given to you. I know it sounds very, geeky that we as corporates when we're, going out in dinners also we carry our laptops inside the restaurant. But we can't do anything about it because you have to ensure the physical safety of the computers that have been entrusted to you by your company. Okay, so physical computer safety, security, just to give you one example, I've mentioned this, but let's go in details about it. First one is internal security. Management can regulate which staff members have access to different types of data. For instance, access to HR records may be restricted to members of the HR team by keeping these records on a separate server or database. Like the personal information, the first point on this slide, the HR related data, it should be kept very highly strictly confidential. So you could keep it in a separate server altogether so that it cannot be accessed by any other person in the company. In this way, only certain terminals may access servers with sensitive or confidential data stored on them. Okay, so that is about the internal security, whereby you can keep the data in a separate server altogether so that only limited people can access it who have the details for that relevant server. Next is external security. So external security about a computer, one example I gave you. Let's understand what's mentioned here. The organization can also protect its data from external access by using firewalls. Anyone heard the term firewall? Anyone who has heard the term firewall?
Imagine our houses without a...
You have heard about it, Windows firewall. So although it is firewall, it is not like a wall which is on fire, nothing like that. I have a small video which I have put here for you. Let's watch that first and then we'll read the balance. It will explain what firewall is about. I'll be sharing it now. Just let me know if you can't hear or see.
Imagine our houses without a fence or boundary wall. This would make our property easily accessible to trespassers and robbers, and place our homes at great risk, right? Hence, fence. Imagine our houses without a fence or boundary wall. This would make our property easily accessible to trespassers and robbers, and place our homes at great risk, right? Hence, fencing our property helps safeguard it and keeps trespassers at bay. Similarly, imagine our computers and networks without protection. This would increase the probability of hackers infiltrating our networks. To overcome this challenge, just like how boundary walls protect our houses, a virtual wall helps safeguard and secure our devices from intruders, and such a wall is known as a firewall. Firewalls are security devices that filter the incoming and outgoing traffic within a private network. For example, if you were to visit your friend who lives in a gated community, you would first take permission from the security guard. The security guard would check with your friend if you should be allowed entry or not. If all is well, your access is granted. On the other hand, the security guard would not grant permission to a trespasser looking to enter the same premises. Here, the entry access depends solely on your friend, the resident's discretion. The role of the security guard in this case is similar to that of a firewall. The firewall works like a gatekeeper at your computer's entry point, which only welcomes incoming traffic that it has been configured to accept. Firewalls filter the network traffic within your network and analyzes which traffic should be allowed or restricted based on a set of rules in order to spot and prevent cyber attacks. Your computer communicates with the internet in the form of network packets that hold details like the source address, destination address, and information. These network packets enter your computer through ports. A firewall works on a set of rules based on the details of these network packets, like their source address, a destination address, content, and port numbers. Only trusted traffic sources or IP addresses are allowed to enter your network. When you connect your computer to the internet, there is a high chance of hackers infiltrating your network. This is when a firewall comes to your rescue by acting as a barrier between your computer and the internet. The firewall rejects the malicious data packet and thus protects your network from hackers. On the other hand, traffic from trusted websites is allowed access to your network. This way, the firewall carries out quick assessments to detect malware and other suspicious activities, thereby protecting your network from being susceptible to a cyber attack. Firewalls can either be hardware or software. Software firewalls are programs installed on each computer. This is also called a host firewall. Meanwhile, hardware firewalls are equipments that are established between the gateway and your network. Linksys routers are a good example of a hardware firewall. Besides this, there are other types of firewalls designed based on their traffic filtering methods, structure, and functionality. The firewall that compares each outgoing and incoming network packet to a set of established rules, such as the allowed IP addresses, IP protocols, port number, and other aspects of the packet, is known as a packet filtering firewall. If the incoming network traffic is not per the predefined rules, that traffic is blocked. A variant of the packet filtering firewall is the stateful inspection firewall. These types of firewalls not only examine each network packet, but also checks whether or not that network packet is part of an established network connection. Such firewalls are also referred to as dynamic packet filtering firewalls. Our next type of firewall is called a proxy firewall. This draws close comparison to how you give proxy attendance for a friend. Like how you take the authority to represent your friend, the proxy firewall pretends to be you and interacts with the internet. They come between you and the internet, and thereby prevents direct connections. This protects your device's identity and keeps the network safe from potential attacks. Only if the incoming data packet contents are protected, the proxy firewall transfers it to you. They are also known as application-level gateway. The firewall can spot malicious actions and block your computer from receiving data packets from harmful sources. In addition to preventing cyber attacks, firewalls are also used in educational institutions and offices to restrict users' access to certain websites or applications. It is used to avoid access to unauthorized content. So, here's a question for you. Which firewall is also known as application-level gateway?
That was an informational video about firewalls and a lot of details it discussed it. I hope you understood what the firewall does. It does the role of a security guard, correct? Like it mentioned, a house without fence or without a security guard, it is easily accessible to robbers and you can be subject to thefts. So in the same way, firewalls protect the information which is there in your information system. That is external security. Internal security, what was mentioned here, that to whom internally only that information should be available. So the example was HR information, personal information about their salary and structure. External security is when you are protecting the information from external sources. Like I gave you example of physical security of our laptops when we are going out. We are not keeping it in the car because it is accessible to a valet. Who knows, he might have wrong intentions. So that is security from external people. Now, external security in this, now we're talking about information systems protection. So the organization can also protect its data from external access by using firewalls. And firewall, now keep it in your mind, is akin to a security guard. A firewall is designed to restrict access to a network by selectively allowing or blocking inbound traffic to parts of an organization system. So, there are some websites which are blocked. Do you know the relevance of HTTPS when you search for any website? Have you seen it? HTTPS. When you look up a website, it says HTTPS and then slashes and then it mentions the website name. What does it denote? Very good, Vinod. It denotes a secured website. It is security. There is a security level for that website, and it seems to be correct. It seems to be a good website. So that it denotes security. Now there are some websites, if you open them, the Windows Chrome and Windows, the web browser calls it out that this website doesn't have HTTPS. Let me see if I remember any website which does it have. I don't know. I'm not remembering currently. So HTTPS you will also see. Just give me 1 second. There's someone at the door. I'll come back. Yeah. So HTTPS denotes security of the website, and if it is not secure, then it calls out that this website is not secure. Are you sure you want to proceed to access it? So that is the level of security which companies maintain, that they will allow only HTTPS websites to be accessed on the company's network. So if you're working in the company, you access their Wi-Fi. Now, if you access an insecure website and due to your fault, like you were accessing something which is not secure, and due to which people who are trying to rob the company's information, they get access to it and they just sabotage all the information, not just the information which is available on your laptops, but also on the entire network. There could be a major security breach. So that is why companies' firewalls, they allow, I'm just giving one example, that they will allow only HTTPS websites. They will not allow any other website. And within those HTTPS websites also, if a company feels that these websites are not secure from their own view, so they could bar those websites also. Like Facebook. It is formally called out that Facebook, it is not a secure website. It keeps a tap on the information that you are accessing and everything. So companies may bar Facebook also and different websites. Just giving for example. So this is the purpose of maintaining a firewall. So if any employee tries to access that particular website, the firewall will block it. It will not allow the website to enter into the company's network. A firewall is designed to restrict access to a network by selectively allowing or blocking inbound traffic to parts of an organization system. It examines messages entering and exiting the system and blocks any that do not conform to specified criteria. For example, blocking incoming traffic from non-specific IP addresses. You can say non-HTTPS websites. They will not allow. Okay. Even I'll give you one example. When a company, it doesn't allow attachment of this pen drives and hard disk drives on their laptops, on the company laptops. Why? Because if there is a virus on your pen drive or hard disk drives, then it can affect the entire network of the company.
which is not safe, right? So that is why it says that incoming as well as outgoing data may be forbidden, that you're not allowed to attach security, these pen drives for security purposes. So in this way, firewalls can be used to protect data and databases from being accessed by unauthorized people or terminals. For example, access to key servers can be restricted to a small number of terminals only. Only few IDs will be allowed to access key information. You will not allow all the people to access all the information. You will restrict it as per their use. Okay, so that is external security, how a company protects itself from external sources of theft and insecurity. Okay, that is about internal and external security, and we were primarily talking about the other controls. Now, if information is held on a server, then the following are required: controls over viruses and hacking. So you'll have proper, Defender, Windows Defender installed, so there is no attack by virus or any cyber theft. Clearly understood policy on the use of emails and corporate IT. Whenever you join a new company, you will be given with all these policies right on the first day, and you'll be required to sign off on it, that you have read and understood the policy. Password system to restrict access to particular files. So some files, they could only be accessed by a few people who have the password details to access them. So if there is information which is held on to a server which you do not want everyone to see, you can have password control. Okay. So these are very basic. Don't expect write down what you understand rules which are there. The questions will not be like that. It's just that you need to understand it, and if there is a scenario based question on it, you should be able to tick the correct box. Or if it is like a constructed response question, you will have to relate these controls with respect to that scenario and write down your points. It will not be like list down these things. You should be knowing these things and how well they are suitable for that scenario. So you only 1 or 2 points which we have discussed might be relevant in that given scenario. So you need to prepare your answer like that. Okay. I hope it is clear. Any doubt from the topic we have covered so far? Controls over information. I'll move to the next topic if there are no doubts. Okay. So security and confidential information. What are the ways to protect information? Password, you already know. You have a Gmail account, so you access it using a password, or for that matter, any account. So if you're using any website, they ask you for your login details, user ID and password. So what are they doing? They are ensuring that only the right person is accessing that account who has the details of the password. In fact, there are two-factor authentication also these days. That first you enter the password and then you enter the OTP also, which comes to your other modes of communication like mobile phone or any other email ID. So that is like a two-factor authentication. So if anyone has stolen your password, then they can also not access your Gmail account directly. There will be an OTP which will come on your mobile phone or your other email ID. So that acts as a two-factor authentication. It is like an advancement of passwords. Next one is logical access systems. So logical access system means what? So if I am in the HR department, I should have access only to the HR work. If I am working in the accounting department, I should have access only to the accounting related data files. It should not be like if I'm working in a company, I should have access to everything which is there in the company. Having logical access only, that is a type of way of protecting information. Logical access system, it means restricted access depending on user authority. Third, database controls, limiting view of database content. So within a team, it might be some things are relevant only for few set of people, of managers of a certain grade and above. So you can limit the views. You can put user access control that only this person can access this file. So that database is accessible only to limited people. Firewalls we have already covered in the previous slide. It's like a security guard for the information that any person external to the company, if it is trying to access it, there will be a firewall protecting that information. Next, encryption. Scrambling information in case of interception. Can you tell me what? It is a very age-old practice, so it was used even during wars. That so if you want to communicate certain words, you replace the letters in those words by something else. So that if an unauthorized person is trying to read that document, he will not understand it because it is written in like a code language. That is what encryption does in a very nutshell. So encryption, it translates your actual information in a protected format, and there will be decryption happening at the authorized recipient's end, that this is the decryption of the message which has been sent out by the originator. So that is known as encryption and decryption. You send out the information in a protected form so that any unauthorized person cannot read it. Only the intended person who knows the key to decrypt the information will be able to read it. Have you seen encryption word mentioned on your WhatsApp chats also? Have a look. Yes, Vinod says yes. Others, have you seen encryption mentioned there? You have seen? Have you tried to understand what it means? It also clearly, it gives in a very short form what it does. So if like you and me, we are talking on WhatsApp. So if some other intruder is trying to know what we are talking about, and he does some sort of keying of information, will he be able to understand the WhatsApp messages that we are exchanging? Will he be able to understand it? No. Because the messages which we are exchanging, they are encrypted. They are keyed in a certain way so that only you and me can understand it. There is an automatic, we do not even see it, but in the background, when I am sending out a message, it gets encrypted. These packets then travel to your network. There is a decryption happening at the background at your device, and then you see the normal message. So that is what WhatsApp does. It says that the messages which you are sending, messages for photos, videos, whatever, the content which you are sharing on WhatsApp, they are encrypted. So when I send it, it gets encrypted when you receive it. So you are the intended recipient of the message. There is a key which happens to be there on your device which translates it. And you see it normally. You do not even understand that this process is happening at the back end. So that is what encryption is about. And this is commonly used in case of companies because they transmit a lot of confidential information. Okay. Yes, end-to-end encryption. And my end and your end encryption is happening. So anyone in between will not be able to access that information. Even if he is accessing it, he will not be able to decode what is written there. Next is antivirus and anti-spyware software. Again, very simple. We have been doing it since our childhood. Installing antivirus on our laptop so that virus and worms, all of these items do not enter our computers. So that is what a protection policy which is followed by companies also installing antivirus and anti-spyware software to protect their information. I hope it is clear. Any ideas you want to share? Okay. If it is fine, then let me know. Okay, if there is any doubt, please feel free. I'm telling you again because now we are starting off with a new batch. I'm just telling you, I keep my classes very open-ended. You can let me know if you have any doubt, you want me to repeat a concept. Please feel free. See, I go with a certain speed so that, we are going well with the syllabus speed requirement. And if you feel that, ma'am, this is a little complicated topic, I want you to explain it again, you are free to ask. All right. Okay. So there is an activity for you all. You have to give me the right answer. Remember, I told you always read the requirement first. What is the requirement here? Which of the above statements are true? Let's read these two statements and then decide. The following statements have been made about IT systems. Employees should be able to change customer records if they notice an error or omission. Transmitted data should usually be encrypted to prevent hackers gaining access to it. Tell me which option would you pick? Which statement is correct? 1, 2, or both 1 and 2, or neither of them are true? Only 2 is true. Can you tell me why option 1 is not true? Can you tell me why the first one is not true? Why is the first one not true? Very good, Gaurav, you're right. So what happens? In the name of correcting the information, I might start manipulating the data. So it's a customer. What I can do, I can change the delivery address of the customer. No, I'm just correcting it. I felt that the data is the delivery address is incorrect, so I can change the delivery address of the customer. I can enter my home's address so that whatever deliveries the company makes, it gets delivered to my home. That is a type of manipulation I can do if I have the access to edit customer records. Okay, that is one example. Second example is, let's say we have the access to modify suppliers' records. Okay, so what we can do, if we have to make payment, the company has to make payment to a supplier. What I will do, and I have the access to change the details of the supplier. I will change the supplier's bank account. The company makes payment to a supplier, but the bank details which I've entered is my details. So the payment comes to my bank account. So all of these types of data manipulations can happen. You can have frauds if you allow things like this to happen. Okay. So it's very important you protect your information properly. That is activity 1. Let's move ahead. Data visualization. This is a new topic applicable from September 23 attempt onwards. Consider this as important. It has been newly added. It was not there until June 23. It has been newly added. So let us, pay more attention to it, because there is normally a higher likelihood of new topics being tested. So let's read it and see what it talks about. It talks about data visualization. So what it says is, as the name conveys, data visualization, that you would have seen ads on YouTube that are you struggling with big Excel data and you don't know how to present it to the leadership, take our course. And this ad keeps coming on my YouTube at least. So what does it show? That data visualization, how can you present the data in a graphical or a pictorial format so that it helps the readers of the report to understand the information easily. They don't have to deep dive into the detailed line format data. And that is what data visualization is. The process of presenting report formats that represent data and information in a pictorial or graphical format. Creation of dashboards. So that helps the recipient to understand the significance of the content more easily than if presented in a traditional report format. Okay, so that is what data visualization is. That the reader of the report understands the information more easily if it is presented to you in a pictorial or a graphical format. You can understand trends, how the data has moved over time, and a lot of different things. Comparison, it can understand using pictorial data. So that is what data visualization helps you to do. The report identifies the following types of visualization tools. Waterfall charts. Let me show you what a waterfall chart is.
So, uh, yeah, I've got an example. So have a look at this. I'll present my screen. You know, this is an example of a waterfall chart. Let me explain to you how it works. There are different connotations given here. I'll explain to you with an example. So what happens is that you have a plan to make a 50 crore margin in a year. Okay. But actually, you landed at 100 crores of margin. So when you present that information to your leaders, they will ask you, now, what happened that gave you a 50 crore rupee extra profit, extra margin? Give me a waterfall report for it. I'm telling you, this is the type of questions and reports we actually prepare. Okay, so let me tell you an example how this report is to be interpreted. So it says that, during the mid-month, let's say middle of the year, we achieved up to 120. How did that 120 happen? So extra units we had sold. The profit is a derivation of a lot of things. It could be number of units, it could be the sale price, it could be the cost, correct? So waterfall, how it is to be interpreted. So from, let us say, January till June, we sold extra units, which gave me extra 40 crores of profit. So the number of units which I sold extra, that gave me a profit of 40 crores. Okay, so that is a plus. Then I had also increased my sales price. By increasing the sales price, my profit increased by 30. So that is what this delta. Delta means the variation which has come. It could be positive or it could be negative. In this way, it is going upwards. So it shows that my profits have increased because of number of units on the sale price. Okay. So this is what happened. And I reached 120 crores of profit in June. Then certain things happened. Let us say my cost increased. I'll not give so many, examples just for reference. So let us say my cost increased, due to which my profit has now fallen down by 20 crores. So because of increased cost, this is a downward waterfall. It has come down and then become 100. So let us say my profits have come down because of higher cost of 20. So now it has landed to 100. So in this way, the waterfall denotes the reasons for the increase or decrease in profit. I hope you have understood. So there are multiple examples which you can also see on your Google. I've explained to you one example how to interpret a waterfall. So you started off at 50, then goodness came from number of units you have sold, then the sales price, then you can say, costs have increased, and then my profit came down by the end of the year. So this is what a waterfall chart look like. It is, prepared in a lot of companies. You will see this one is another example of a waterfall. You can prepare it on Excel also. If you want to learn, you can look up videos on the internet. You can prepare waterfalls in Excel. This is not some big software giving out a waterfall like that. You can easily prepare it on Excel. It just shows that you started off the year with 100, then you made some, January, then you made 23 extra, 38 minus, so it is coming down, see, it has come down to 38. Then again, it came down 24, it increased by 12. So see, I am sure you now understand the downward and the upward movement happening in the graph. Please take a look at this and let me know if you have understood how does this waterfall chart work. See, this one shows an upward trend, down, down, up, then again down, straight up, down, down, then up, and up, and now it has landed to 68. So it is like breaking down the movement of something into smaller parts with reasons being mentioned. Here, they have done it over the period of an year. Please let me know if you have understood. Any doubts you want me to explain with more examples, we can do it. Very important topic, I would say, from exam perspective. You'll not have to prepare the chart, because you should know that this is the type of a data visualization tool which is available. No doubt. Okay, then let's come back and read it. Now, when you have visually seen how the waterfall chart looks like, now if you read it, you'll understand better. These are also known as bridges and are often used to present variance analysis. Like I told you now, what happened that your profit increased so much? You have to explain that variation. So this is an important chart for presenting variance analysis. The size of the steps. Now you understand what the size of the steps mean, those small layers I was showing you, up and down, up and down. The size of the steps in the bridge are scaled so that the eye naturally focuses on the most significant movement first. So the highest movement had come from increase in the number of units which are being sold. So that was denoted in the size of that bar. Correct? So that is what waterfall charts are about. Keep that visual in mind and then read it. It becomes so much easier. These are also known as bridges and are often used to present variance analysis. What led to this gap? So you are explaining all those delta points. The size of the steps in the bridge are scaled so that the eye naturally focuses on the most significant movement first. Clear? It's like how things, very good, you're right, Parth. How things have moved from point A to Z. What are the reasons? Up, down, whatever it is. But what are the reasons which made you land to Z from A? Okay. That's a waterfall chart. Next is dashboards. These provide a relevant summary and are often used to provide 4 or 5 relevant drivers that give an overview of a business area. Let me show you with example first. Because dashboard is something which is, specific to different business areas. Let me see if I can get something for a credit card company or an specific business. Yes, I got a good example. Let me take a simpler one. You get a little confused with this. I got a good one. Let me show you this. So I looked up for a financial dashboard of a restaurant. Have a look at this, okay? The analysis. How does it look like? Different key important metrics which a company tracks. What could it be? Revenue, cost, number of customers. What are the items which sell the most in that restaurant? These all important metrics put in one place. I was trying to look up for a credit card company first. So for a credit, it will be different for each type of a business. So here when we are seeing it for a restaurant, see, revenue YTD. YTD means year till date. So if I am preparing a YTD May dashboard, from January till May, what has been my revenue?
What has been my cost? What has been my net income? Okay. So these are the things which you can plot. Then what has been the breakup of the items which are sold? Okay. Sorry for that. Yeah. So what are the different types of items which are being sold? How has the growth looked like year on year, month on month? So all the key metrics of a business presented in a small summarized way with the use of graphs and different types of pictorial representation. That is what a dashboard is. So each company, each business prepares a different type of a dashboard. This one is for restaurant. You can look up for a cinema hall. For any type of business you want to look up, you'll get a lot of examples. So it basically denotes the metrics which are important for tracking from a company's leadership perspective. Okay, this is an example of a restaurant dashboard. Okay, so this templates you can easily find on the net. Now with this in mind, let us read it. These provide a relevant summary and are often used to provide 4 or 5 relevant drivers that give an overview of a business area. Then how many customers you sold to, what are the number of units you sold, what is the best food item in your restaurant, what is the sales of that product month on month. So 4 or 5 relevant drivers that give an overview of the business area. Each driver can be further analyzed by drilling down into the supporting data. So if you are looking at the revenue YTD, if you click on that, you will get a detail of, January month revenue, February month revenue. And then if you further click on it, what all items have been sold that make up that revenue. So that is the level of detailing which happens in a dashboard. So the bird's eye view, it will just show 4 or 5 items. If I want to drill down into it, I can click on it and I get supporting data. So these are all automated items which helps in visualizing the data. Okay, that is a dashboard. Next is line charts. Very simple. You would have seen, I'll just show it to you quickly. Very simple. The trend lines. How has the population grown over the year? How has the sales grown? Maybe the stock price movements. So all of that can be tracked on a line chart. Different things can be plotted. I hope it is clear. Very, very simple. This is a very basic graph. Now let's read what the slide says about it. These are often used to show trend analysis or a time-based result such as product sales over the last 5 years. Okay. Then mapping charts. So mapping charts, now you will understand from where your customers are coming, which geography. So if you're running a website, international website, you need to see from where you are getting the maximum traffic. So this mapping chart, it will present the data geographically. For example, countries or regions that can be clicked on. So now if you are seeing that you're getting maximum traffic from America, then you click on it. And then you find more information about that area. What is the sales which is happening in America? Which city in America is giving me the maximum sales? That is what mapping chart is. Basically, it presents the data geographically. Next is bar and pie charts. These are very traditional charts, bar diagrams, what has been the sales. So you'll have a bar diagram. Let me show it to you quickly. Bar and pie chart. So this is a pie chart. Pie chart, and this is the bar diagram. So what are the reasons of travel? Plotted here. Then what are the bifurcation of it? Okay, just 1 second, please. So this is what a pie chart or a bar diagram looks like. I hope it is clear. Different men or women, how many women are, involved in drama, painting. You can prepare a pie chart out of it. All of this can be easily prepared in Excel. Here. And lastly, table Table is the most traditional method. We do it all the time, presenting the data in a tabular format. The traditional way of presenting reference material by breaking it down into rows and columns. I hope don't need to show example for this. Pretty basic. Okay. The main impact of data visualization on organization is the change that they bring to how information is presented, because data presented in dashboards and mapping charts can be drilled into. Like I told you now, revenue, then what is the detailed breakup, month-on-month details of the revenue. So it can be drilled into, you can go deeper into it. They are geared towards being presented on tablets and smart devices rather than on paper. This makes reporting quicker and cheaper and should support the quicker decision making. Of course, if you are presenting data on, computer, you can take quicker decision rather than presenting data in paper format. Required in modern business environment. See, I'll tell you, this is the beauty of ACCA syllabus. How they are actually putting content which is there in the corporate setup in your syllabus. I'm telling you very frankly, we do this day in and day out at work. Preparing waterfalls, preparing these line charts, bar and pie diagrams, and how they are trying to relate it to your study. That's the beauty of the syllabus. And they're telling you also that, when this data is presented in the tablets and the smart devices, you can take quicker decisions on the basis of it, because that is how leaders see it now. You'll not gone are the days when you present data in paper format. So it is important for organizations to provide the necessary technology and training so that staff get the most out of the visualizations and can use them for improved decision making. Is it clear? Any doubts on any type of data visualization? I'm telling you again, this is a new topic in the syllabus. Make sure you have understood each one of them properly. I've tried to show it to you with examples. If you have any doubts, just let me know. I'll move to the next slide, which is the last slide of this chapter. Is it clear? Clear. Okay. Let's move to the next one. So to be effective, data visualization should have the following features. What are those features? Interrogation. The tool must have the capability to interrogate the systems and the overall business. What does it mean? That the data which you are presenting, it should arouse questions. Why? It should explain why something is happening. So it should have the interrogation feature, that if someone has the question, it addresses that question. So the system should have that capability to address the whys and the hows. Okay, that is interrogation. Next is decision making. The tool must be focused on results and support decision making. Do not present random things to the leaders. Present them what helps them to take decisions. So the data visualization which you are doing, it should support decision making. Next, it should be timely. Don't think you prepare such complicated things that it takes a whole lot of time to just prepare it. Decision making is next to it. So the tool must display the results quickly, because delays may make insights or rules discovered out of date. That, overview which you are getting out of the data, if any change, minute change is taking so much time to reflect in it, it will delay the process unnecessarily. So the data should be, the dashboards, they should be prompt. Quickly you can maneuver the data and give out the necessary results. Last is infrastructure. The tool must be supported by sufficient quality and quantity of data. So your infrastructure which you are using to prepare the dashboards or the diagrams, it should be provided with sufficient quality and quantity of data so that it gives out the right results. See, there is a common terminology which you would hear is GIGO, and that means garbage in, garbage out. So if you are putting garbage inside system, the highest quality of data visualization tools you may have, if you're putting garbage into the system, the report which it will give out is also going to be garbage. So garbage in, garbage out. So if your input is faulty, your output will definitely be faulty. So that is what it says, that the tool must be supported by quality and quantity of data, so that it gives out the right reports. Data visualization can make data easier to understand. However,
It can also oversimplify things. This is a limitation of data visualization. It can oversimplify things and even mislead in certain cases. It is therefore important to consider whether there is any bias, deliberate or through misunderstanding, in the way the data is presented. So I'll tell you. So you have a lot of data to present, but in your mind now, you have decided that I want to reflect this picture from the data. That is known as personal bias. That you've decided, I want to convey this picture. So you will pick up only the relevant things from the data and put it as a part of the dashboard. You only want to show the growth trajectory. So there is a bias which is coming in your mind, and it is reflecting in your data visualization tools also. For example, bias can occur by manipulating the axis on a graph or a bar chart, or by omitting elements and not present the data which shows downward trend. This is something which is a limitation of data visualization. Okay, you can manipulate, it can oversimplify. So this leads to, it reduces the efficiency of data visualization. Is it clear? What are the features of data visualization? It should be it should have the capability to handle interrogation. It should support decision making. It should be prompt, and the tools should be efficient to handle good data infrastructure. And what are the limitations? Limitations are there can be bias reflecting in it, and it can lead to manipulation of data. Please let me know if this is clear. We are done with the chapter number 1. Take a moment. If you want me to revisit any topic, we can do it. All here? Great. Then let us move to the next chapter. Okay, so that's chapter number 2, information systems and data analytics. Okay, as I told you, first few chapters are purely theoretical, so it gets a little monotonous, but post like 2-3 chapters, it's all going to be practical oriented, so you will also enjoy it more. Okay, information system and data analytics. Very important chapter, I would say. There are a lot of questions in the PR kit which are from this chapter. So make sure you understand it properly. So I was giving you examples of Anthony's hierarchy now yesterday in the class. So this is the Anthony's hierarchy. What does it say? Within and at all levels of the organization, information is continually flowing back and forth, being used by people to formulate plans and take decisions. So that is what the purpose of information is, no? To support decision making, to help you to formulate plans, and to draw attention to the need for control action. If something is going off track, then the information helps us to understand. Now, if your work should have been completed in 2 days and the information system is showing that it is still work in progress, it means what? There is a need for taking control action so that you come back on track. When the plans and decisions don't work as intended, we defined planning, control, and decision making in chapter 1. So we had one slide devoted to the definition. So we already know what planning means, control, and decision making means. Now, Anthony's hierarchy helps us to give levels to the information. This is the first graph which you should add in your summary deck. The name of the tab should be Anthony's hierarchy. See, I'll tell you what I would have done. Let me open a new Excel file. You will have to prepare it at your own end. So let me show it to you. So this is your new Excel file. What I would do. So when you get the deck, this presentation, when you get it, what you do. Okay, I'm telling you one shortcut, and that is Windows Shift
and S. I hope all of you are using laptops now. If you click on Windows, Shift and S together, okay, three keys together, you can drag the rectangle around the screen, whichever you want to capture, okay. You click on it, and then if you come to Excel, you just press Control V. See, it just pasted the data here. I'm giving you one example. So I would name the sheet as, Chapter 2, Anthony's hierarchy. So this hierarchy, if I just put it in the summary sheet, I will be able to refer very easily on the day of the exam, Chapter 2, Anthony's hierarchy. If I'm getting the relevant data from this slide, well and good. If I want to read further about it, I can go to the Chapter 2 notes and revisit the content. But this hierarchy name and what all it denotes, it is clearly reflecting in this file. So when you get the deck, so currently what you do, you create a new Excel file, call it as a summary sheet. You add one tab like this. Just add a tab with this name. And when you get the notes, just, copy the screenshot, the relevant thing for this, like I've shown you. This is the relevant thing which you can put in your summary file. This you will be using before exam. I'm telling you, it is going to be such a good time saver and a good revision technique that Anthony's hierarchy I want to see. I will open the relevant tab and I'll just look at the slide. Because there will be a lot of chapters. There are 21 chapters in your curriculum. So it will not be possible to revisit each and every slide right before the exam date. But the models, at least you will be able to visit if you are preparing the summary file. So I'm repeating myself, make sure you make the summary file. It will be really, really helpful for you. I hope it is clear. You can, I'll repeat the shortcut keys part. It is Windows button, Shift. So move your fingers like that. Windows, Shift, and then press S. You'll be able to take a screenshot. If you drag across any screen, you'll be able to capture a rectangle, and then you press go to Excel and press Control V, which is a paste shortcut. Okay, Gaurav, there would be about, I think, 20 models minimum, I'm saying. There are a lot of models which you'll need to remember. So make sure you keep on, see, the model when I explain to you, it will seem very easy. But before exam, it might so happen, what was Anthony's hierarchy? You just keep wondering. But one glance at this sheet and you will remember Anthony's hierarchy just classified information into 3 levels. And then you are prepared for the exam. So just a job of 1 second before exam, and it can really help you ace your exams. Is it clear? So the shortcut, I'll be asking you to use it a lot of times during the class. So by the end of it, you will remember it by heart yourself. Windows, Shift, and S. The left shift. Okay, you can use that left shift button. Windows, Shift, and S. I hope all of you are able to do it. So let me present this screen now. Try it for the time being. Just try it once. Windows, Shift key, S. Drag a rectangle around this part. Anthony's hierarchy and the small rectangle here. Let me know if you are able to do it or not. And paste it in your Excel file. Let me know if it works. What happened? Why is everyone so silent? Are you able to take a screenshot or not? Windows, Shift key and S, drag a rectangle around this part and paste it. Are you able to do? So, see, sometimes I'll tell you, take a screenshot of this. You can do it. And if you feel sometimes on your own that, I want this to be a part of my summary deck, don't clutter your summary deck a lot. Just the relevant things which you feel you might forget if you don't look at it.
No, that only you should put in your summary deck. It's your file. You put up the things you feel you might forget. Okay, so that is Anthony's hierarchy. So like that, I have put chapter 2, and this is the information level topic. So what does Anthony's hierarchy do? It classifies the information into 3 layers: strategic, tactical, and operational. So just to give you examples, who do you think will be at the top of the triangle? Chief Executive Officer, the CEO, Chief Financial Officer, the CFO, Chief Technology Officer, CTO. Okay, so these are the executive officers. They will be at the strategic level. Okay, that is why this is the smallest part of this hierarchy. If you see, this is pretty long. This one is also pretty big, but there are limited people at the top. And these people, they need information for long-term planning decisions. Okay. So that will be the level of requirement for the people at the top: strategic, long-term planning decisions. Then comes the middle level management, and they are known as tactical, medium-term planning and management control decisions. So here it will comprise of, directors, the managers, senior managers. So they will come at the tactical level. They are known as the middle level management. And then at the bottommost part of the Anthony's hierarchy, where most of the people work, they are the operational staff, which help in, taking routine decisions. Every day you have to decide on something, that type of, and it is clearly laid down as a procedure. If yes, this, if no. So all of the decision hierarchy is very clear. Here, it's very straightforward. So these are the entry-level positions in a company, and they are known as operational managers. They take short-term decisions and are involved in routine processing of transactions. Every day, punching sales, punching purchases, all of that. That is done at the operational level. Then people at a senior grade than them is known as tactical managers, and at the super top level, they are known as strategic managers. Here, so that is about Anthony's hierarchy. Let's read about them one by one. Strategic planning. The process of deciding on objectives of the organization changes the resources used to achieve these objectives and the policies that are to govern the acquisition, use, and disposition of these resources. Very complicated language. In short, it is saying that people at the strategic level, they are involved in taking long-term decisions of the company, and more or less they are about the objectives why the company is working. Okay, so that is what it says. The process of deciding on the objectives of the organization and what all the company should do, how much resources it needs to achieve those objectives, attain those objectives. That is what people at the top do. Strategic planning. Okay. Then comes the middle level management or the tactical control. Management control or tactical control is the process by which managers assure that resources are obtained. See, people at the top are saying how much resources will be needed. What are the objectives which these resources need to fulfill? That level of thinking is happening. The middle level management will be concerned about ensuring that the resources are obtained and they are used in the best possible manner. It is sometimes called tactics or tactical planning. Tactics to achieve the objectives laid down by the strategic management. Okay. See, from your exam perspective, you can see operational control is the knowledge level papers. You are learning all about techniques. Now you are at the skill level. So you are learning how to implement those techniques and take decisions which will support your strategic level papers, where you will be formulating strategies to support the decision. Okay, so that is how you can relate to your exam preparation. So operational control is the process of assuring that specific tasks are carried out effectively and efficiently, that specific techniques are followed which are laid down as a standard, needs to be followed on a routine basis
so that the functioning, the hygiene of the company is maintained. That is operational control. Okay. So strategic decisions which are taken by the strategic management are long-term decisions and are characterized by their wide scope, wide impact, uncertainty, and complexity. Of course, people at the top, the CEOs and the CFOs of the company, they work in a lot of uncertain environment. See, operational management, they are taking routine decisions every day. Whatever has been told to them by their seniors, so they work in that flow. But people at the top, they have to get themselves involved in uncertain environment, which is complex. You don't know what will happen the next morning and how you will react, because every day it's a new challenge for you. You're not doing routine activity when you're at the top. Okay. So the information requirement, don't you think the information which the top managers will need will be, starkly different from what people at the bottom would be needing? Do you agree or not? Will you give the same type of information to the CEO and CFO versus what you're giving to executives in a company? Will the information be same? No, it will be different. It will be suitable to what they want to do. What is their scope of work? So the scope of information changes as per the scope of work of that person. That is what Anthony's hierarchy helps us to understand, that there are 3 levels of management in the company and the information requirements of each one of them are different, because strategic management is involved in long-term planning decisions, tactical management is involved in medium-term planning, and operational management is involved in routine processing of transactions. So that is what Anthony's hierarchy helps us to understand. Clear? So let's do one activity on the basis of this knowledge. You will be giving me the answer. What is the requirement? How would information concerning the development of new services, such as the provision of car parts, be classified? Let's read the scenario and then read the requirement again. Hydra Company is a bicycle retailer that has a significant presence in the south of Thailand. Each retail outlet has a manager who is responsible for day-to-day operations and is okay. If each retail outlet where this bicycle is being sold, that has a manager and it is supported by an administrative assistant. All other staff at each location are involved in retailing operations. How would information concerning the development of new services, such as the provision of car parts, be classified? Will you classify it as strategic, tactical, or operational? Think and answer. Meet is saying C. How will it be C? It's you're thinking of developing a new service altogether. Obviously, people at the top will be deciding the scope of services of a company, no? Or will it be people at the bottom? Do you think the entry-level people in a company will be able to decide whether a company should take up a new service or not? It will definitely be people at the top. They will be deciding. See, it gave you a scenario that it is a bicycle retailer, it is doing something for so long, and now they are saying car parts. Do you understand how different it is from its existing scope of work? It is a bicycle retailer and it is thinking of venturing into provision of car parts service. Do you think people at the middle or the bottom level of the hierarchy will be able to take such a decision? No. It will definitely be people at the top who will ask for strategic information on this and then take the decision. So the correct answer would be strategic information. Okay, so let me show you the answer here. The explanation also is provided. The correct answer is strategic information. You will get the answer files, okay? This Excel which I'm presenting, you will get the answer file also, so you need not note it somewhere. The correct answer is strategic information. Strategic information is required by the management of an organization in order to enable management to take a longer term view of the business and assess how the business may perform during that period. The length of this longer term view will vary from one organization to another, being very much dependent upon the nature of the business and the ability of those responsible for strategic direction to be able to scan the planning horizon. So basically what it is saying is this strategic information is required by management to see the longer term view of the company. How long that view is, it will vary from organization to organization. So for, let us say, if I have a company called Anushka Limited, for me, long term starts from 3 years. 3 years onwards, whatever it is long term. Now, if you have a company known as XYZ Limited, you will have a view that, let us say beyond 7 years, whatever decisions will now impact me, in those span of 7 years and beyond, that will be strategic. So the length of this long-term view, it will vary from one organization to another. Strategic information tends to be holistic and summarized in nature. Okay, so the information will be holistic. It covers all the aspects, but it will be in a summarized manner. So the answer is strategic information because it involves the development of new services and it will affect my business for many years to come. So it is therefore strategic. I hope it is clear to you all, those who said some, tactical or operational. I believe now it is clear to you. Okay. Next topic is information for strategic management. So what are the information requirements and what are the qualities of that information? Let us understand it now. Strategic management accounting. Once again now. Strategic management accounting is a form of management accounting in which emphasis is placed on information about factors which are external as well as non-financial and internally generated information. So it says that the strategic management accounting, it lays emphasis on external information which has a future orientation, and it could be financial as well as non-financial, internal as well as external. Okay, strategic management accounting differs from traditional management accounting because it has an external and future orientation. External orientation towards customers, competitors, what the customers want, what the competitors are doing, what are the suppliers' requirements. Suppliers are demanding higher price for their products, or they want they maybe if you do not increase the prices, they will reduce the quality of the products. So other stakeholders, what are they all doing? Okay, so that is about external orientation. So people at the top now, they will be looking at all of these different types of stakeholders, like even the shareholders. How does the decision which the company is making, how does it impact the shareholders? That is external orientation. It is towards different types of important stakeholders like shareholders, customers, suppliers, competitors. So like, when we have an event of a very large scale, so we will look at what our competitors are doing now, so that we can also ensure that our product, it remains, attractive, or our offering remains attractive to that customer. The customer doesn't go to the competitor. It should remain, it should stick with us. So this is the type of decision making which people at the top take. For example, while a traditional management accountant would report on organization's own revenues, strategic management, it would report on market share. So like, let's say, I'm talking about Flipkart. So what is Flipkart's share in the overall e-com industry? So currently it stands at about 52%. Okay, so that is strategic information. Do you think traditional accounting, which you have learned as accountants, like normal financial accounting, does that capture it? No. I hope now you will start seeing the difference between normal accounting, and what is expected of you as a performance management expert. You see how your company is performing. So let us say Flipkart's share is 52%. Then what is the share of Amazon? What is the share of Meesho? All of these are e-com companies, Nykaa. So while a traditional management accountant would report on organization's own revenues, strategic management would report on market share or trends in market size. So how has the market size of Flipkart grown over time? Last year in 2022, it was this much. In 2023, it has become this much. So the strategic management accountant will report on all of these aspects. So it looks external. Whereas traditional accountant looks inward. It just sees how much revenue the company has made. But a strategic management accountant, he will look at what you are doing, what your competitors are doing, and then give in-depth analysis. I hope you're able to follow the difference between traditional accounting and strategic accounting. Okay. So the next feature of strategic management accounting is that it is future looking. A criticism of traditional accountant is that they are backward looking. See, when you are preparing your financial statements, you report what has been your sales for the year ended. Like what has happened in the past? What is your cost in the past year? What is your profit? So you report on only backward data. Whereas people at the top, they will be concerned not just with the backward data, but what the industry looks like in the future. So criticism of traditional management accounting is that they are backward looking. Decision making is a forward and outward meaning external looking process. Accounts are based on cost, whereas decision making is concerned with values. Okay, so I'll give you one example. As a traditional accountant, you will see that the company has incurred 5 crores on marketing campaigns, okay, to publicize its products. As a strategic accountant, you will see that you spent 5 crores in this year, but what is the value it is generating in terms of brand awareness? The value impact of it. Let us say you are getting customers worth 10 crores. Now, who are giving you business worth 10 crores. By spending 5 crores, you're getting customers who are spending on your platform for up to 10 crores. So as a strategic accountant, you will see the value which this expenditure is bringing, right? So accounts are based on costs, whereas decision making is concerned with values. Strategic management accountants will use relevant costs, that is incremental costs and opportunity cost for decision making. Tell me, what do you understand with incremental cost and opportunity cost? Think and tell me if you know about it. Do you know what an incremental cost is? What opportunity cost is? Rhythm is saying incremental cost is the extra cost incurred by producing one extra unit. Okay. What do you understand by opportunity cost, relevant cost? Meet says cost of opportunity foregone. Gaurav says opportunity cost is the benefit which we would have derived by taking specific project, which we have not chosen, and those resources are utilized somewhere else. Super, very good definition, Gaurav, good one. that clearly explains what opportunity cost is. So let me show you here with examples. Okay, I have added a few things here. So in some of the Excel files which I share with you, you will see this scribble word, scribble name sheet added. So whatever, sometimes when we discuss, I want to put it down in the notes. I put it in the summary tab. Scribble tab here. You can have a look at it later. So let us understand what incremental cost could be in the scenario where you are starting off a new line of business. See, you have a business of bicycle, repairing, like we saw in the previous example. And now you are starting off a new line whereby you are going to repair cars. Okay. So what is the incremental cost which are being incurred because you are starting a new line of business? So, new set of expenditures which are going to be happening only because you're starting a new line of business. Maybe it is in terms of purchasing materials for repairing the cars, the new staff you are going to hire for doing the repair work, finance. So what all, how are you going to finance the new line of business? So you'll be incurring some interest costs, right? Depreciation. And what is the incremental revenue which is coming out of it? So for a new line of business, you can compare it very easily. That is how you can explain and understand incremental cost. Okay. Then opportunity cost. See, what is opportunity cost in simple terms? It is the cost of next best alternative. See, okay, I'll tell you one example. So I'm currently teaching you. Okay. I'm getting a certain remuneration. If I were not teaching you and I were doing something else, let us say I was doing some other work, and the benefit or the remuneration which I would be getting out of it versus the remuneration which I'm getting out of it. So what happens is, if I'm doing, if I'm in coaching, I'm not being able to do that new work. So the value which I'm foregoing because I am coaching, that is opportunity cost for me, for teaching. That if I am teaching, my time is consumed in teaching, I am not able to take up that new work. What is the benefit which I am foregoing because I am teaching? That is opportunity cost. The cost of next best alternative. Okay. So let us say you start off a business in 2002 by purchasing a land worth 10 lakh rupees. Another capital expenditure of 40 lakhs. So 50 lakhs expenditure you have incurred. Okay. So revenue which you need to generate to cover this cost is minimum 50 lakhs. All right. If you do not use the land for business, you can sell that land today at 50 lakh rupees. So opportunity cost of land will be 50. You will not, so in 2022, okay, in 2022, you have purchased it in 2002. In 2022, if you do not use the land for business, it's not like you will say that the cost of land is going to be 10 lakhs. No, it is going to be your, what is the value you are going to get by selling the land today. Okay. So if you are able to sell the land today at 50 lakhs, this is the opportunity cost of land. You will not say that I purchased the land at 10 lakh rupees, that is my cost. Because the applicable cost today, if you were not using it for business, you would have sold it for 50 lakhs. Okay. And other expenditure you are incurring is 40 lakhs. It's the same here. Okay. Other expenditure, 40 lakhs that you have incurred. So your total cost of land which you will be quoting in 2022, it would be 90 lakhs. I'm not talking from traditional accounting, what you are reporting. I'm saying from a strategic management point of view, today your revenue should be covering at least 90 lakhs. Okay, because if you were not using the land and you would have sold it, you would have got 50 lakhs. So you should not say that the cost of my land is 10 lakhs and my revenue should cover at least only 50 lakhs. Your revenue should be covering the opportunity cost of land as well. Because if you were not using it for business, you would have sold it at 50 lakh. So that explains the concept of opportunity cost. So I gave one more example here. Like if I'm not, if I were not teaching, what is the remuneration I would have made from these many hours? So that would be my opportunity cost. In the same way here, you purchased the land long back in 2002 for, let us say, 10 lakh rupees. Okay, I just remove the extra line items to make it simpler. So the cost of land, you start a new business, so revenue, it should be enough to cover 10 lakh rupees. Okay. But now when you are evaluating the purpose of the land, you will say that the opportunity cost of land will be 50 lakhs, because if you were not using it for business, you would have sold it for 50 lakh rupees. So that will be the opportunity cost. Revenue to be generated should cover 50 lakh rupees. You will not say that I'll be generating enough revenue for 10 lakhs only. Okay, so that is the concept of opportunity cost. Please tell me if it is clear to you. If the concept of opportunity cost is clear. It is the cost of next best alternative. I've just put an example here for reference. Opportunity cost and incremental cost both. Please let me know if it is clear to you. Mini says yes. Others, please take a moment, no hurry. Just let me know when you're done. Clear? Okay. Then the next concept is relevant cost. Very, very important. Okay, please listen to me carefully. This concept is there's a proper chapter on this concept. I'm just laying down the foundation for it now. See, let us say you are starting a new business. You're thinking of starting a new business. So what will you do? Will you start a business without doing any research? So you think today you want to start a new ice cream business. You'll not conduct any research, anything. You'll just start up the business. No, you will conduct a marketing research. So that, let's say, is costing you 25 lakh rupees. You're thinking of starting a new business. So what you do? You're spending 25 lakh rupees on that marketing research. There could be two outcomes of that marketing research. Marketing research might say that the new ice cream business is a good idea. Okay, the idea is feasible, you can work on it. Or the marketing research, it says that no, the business idea is going to be a failure. There could only be two outcomes, yes or no. So let us say it turns out that the marketing research says that the business idea is feasible. Okay. So you start the business. Will you consider this 25 lakh rupees as a relevant cost? Will you consider this while you are evaluating the net benefit from this business? Anshu says yes. Okay. Others, what do you think? All of you are saying yes. Gaurav is asking, ma'am, is relevant cost same as directly attributable cost? Directly attributable costs are relevant costs, but not all relevant costs are directly attributable costs. I can say it in that manner. See, I'll explain to you. You all said that, ma'am, yes, please take the cost of 25 lakh rupees as the cost of business. I'll say no. Why? Because tell me one thing. Now, if the marketing research says that the business is not going to be successful, is the marketing research company going to pay you back that 25 lakh rupees? Will it pay you back if the marketing research turns out to be negative? No, it will not pay you back. No company will pay you back the amount which you have paid to them to conduct the research, because it is its job to tell you whether the business is going to be successful or fail. So you have spent 25 lakh rupees. Now, whether or not you start the business, that expenditure will have to be paid. So do you think it should be added to the cost of business if you're deciding to start it? No, it is not a relevant cost. 25 lakhs will not be considered in the total cost because it is a sunk cost. You have incurred it and now there is no going back. It will not, yes, whether the business is started or not, you will have to pay it. So you cannot say because the business is starting, I will add it as a cost. Now if the business doesn't start, then what? Where will you attribute this cost? No, you will not attribute it to this business. You will say it is like a general cost. It is a sunk cost. You will not consider it as relevant to decide whether or not you should, to find out the net value which this business is generating. Okay. So if the outcome is yes, the business idea is feasible, you will attribute the cost of land. Like in the previous example we have covered now, opportunity cost of land is 50 lakhs. Only that much will be your cost in this year 2022. If you're still saying that the business idea is not feasible, you might just go on to sell the land. You will realize 50 lakhs, that's done. And this 25 lakhs, you will not say this is the cost I've incurred for this business. It's a general cost to help me understand whether or not I should take up the business. So it falls in the definition of irrelevant cost. Why? Because it is incurred and no matter what you do from now, it remains that. No company will come and pay you back just because the idea for which you conducted the research turned out to be a failure. So this 25 lakhs will not be considered in the total cost because it is a sunk cost. So we can say that opportunity cost is relevant cost and sunk cost is irrelevant cost. Okay. So I'll tell you. So relevant cost example, I'll explain. Both of your queries I will take up. So Parth has a query that if the business succeeds, then the cost needs to be recovered. I will not hold this cost to be recovered from this business because whether or not I do business further on, I will not be recovering it. Let me show you with more examples. Okay. So let us say my revenue per annum from this business, if it is successful, it comes out to be 20 lakhs per annum. And the cost of achieving this revenue, let us say 5. Okay. So every year I am making 15 lakhs. Okay. I'm not sure if you're aware about the concept. This is your year 1, year 2. This is year 0. And here you will attribute some initial investment. Let us say here your initial investment, we are talking about the cost you need to attribute in the first year. Initial investment, I'm saying that you take only as the cost of land. Okay. Initial investment, you have made 50 lakhs in the 0th year. First year, you are making 15 lakhs. And every year, okay, every year, you are making 15 lakhs. Same, let us say it is constant. So you have the revenue for 6 years like that. Now, when I will be finding out the NPV, the net present value of this project, let us say I find it out as at the rate of 12% to discount the cash flows. Okay. Or let me show it in a better way. Discounting factor at the rate of 12%. Let me explain to you briefly. This is not something expected in the PM paper. It's a finance topic, discounting factor at the rate of 12%. It means that the value, the 15 lakhs, which you are getting after 1 year, it has slightly less value in today's terms, right? So if I give you an option, take 15 lakhs from me today and take 15 lakhs from me after 1 year, which option will you take? You'll take the option of taking the money today itself, now, because in 1 year, the money will lose its value, correct? So we say that 15 divided by 1.12. So the value of 15 lakhs I am receiving after 1 year, it is 13 lakhs today in today's terms. And like that, every 15 lakhs value, it will depreciate. Okay. So when I'm finding out the NPV of this project, I will say it is, say, I'm telling you again, it's a finance topic, not relevant for your performance management topic, but I'm just explaining to you the concept of relevant cost. So I will say that the investment that I have made initially is 50 lakhs. Okay. And the net present value I am making from this project is 11.67 in a present value terms. Now, this is when the business is successful. I did not factor the cost of marketing research here, right? I just said that whatever is the cost of land, that is my only cost. Now, just imagine. If the project is not successful, there will be no revenue, no cost. So initial investment, what I have made, this will be my loss for the business. Why is 25 not relevant? Because whether or not I do the business, I will not get the money back. So why should I penalize my business if it is successful that you give back my value of 25 lakhs? What is the relevant cost? The value which I spent, a value which I attribute towards the land. Because if I do not use the land for business purposes, I will be selling it and I will get the money. So that is the opportunity cost. I can realize this 50 lakhs from somewhere else. Correct? If I sell it, I'll get the 50 back. But if I do not do the business, will I get the 25 back? I will not get it back. So if my business is successful, I cannot say you recover that 25 lakhs from this business and then tell me what is the net present value I am making from this business. It has to be only those costs which are relevant for the business. Okay. So Parth, to answer your question, will we recover? Parth has said no. If the business succeeds, then the cost can be recovered, right? You can recover as much as you want, but you will not find out the value of this business depending on this 25 lakhs expenditure. I will not attribute it here. See, if I attribute it in this example, I would have taken 75 lakhs here, 25 lakhs cost and 50 lakhs. Then the project would be negative. And then I would say that the project doesn't seem to be good because I'm unnecessarily attributing the cost of marketing research to this business. Okay, which is not true. This 25 lakhs has been incurred just to decide whether or not I should take up the business. Okay. So that is why it becomes an irrelevant cost, because whether or not I do the business, it remains incurred. I will not ask my business to recover this money for me. If it is recovering it more than that, well and good, but I will not say that the value of my business has decreased because I conducted a marketing research. Okay, that will be considered as a general cost, not a cost which is attributable to business. Please understand there is a difference between financial accounting and financial management and performance management. Normally, you would record it as an expenditure, marketing research cost debit to bank account, and you will put it in your P&L. But when you are evaluating a business, you have to be fair to it. How much value is my business generating? That will be dependent on its relevant cost and relevant revenue. Not something which has been incurred and it will remain incurred whether or not I run the business. Okay. So that is what I've explained here, the concept of relevant cost. So this you have to understand. You will not be recovering that 25 lakhs from this business. It will remain incurred, and when you are calculating the overall profit of the company, then you will minus it. But when I'm evaluating my business, how much profit this business is generating, then I will not treat it. Okay, so this is how the concept of sunk cost is explained, that it is irrelevant for my business decision skills.
Now the next question which I got was, ma'am, can you give me examples of relevant cost? Relevant cost would be meet like the cost of materials. So it will be incurred. The material cost will be incurred only if you run the business. If you do not run the business, you will not incur the material cost. Correct? It is directly attributable to the business. If you do the business, then only it gets incurred. Labor cost. You will employ staff only if you're running the business. If you're not running the business, will you incur cost here? See, did I put cost here? No. If my business is not running, there will be no cost. Then, some sort of a rental property you have taken. Okay. So 5 lakhs rent you are paying every year. That you will pay only if you are running the business. Will you pay it if you are not running the business? No. So only the costs which are incurred, if you do that activity, that is a relevant cost. If there is a cost which doesn't care whether or not you do that activity, it is known as a sunk cost or an irrelevant cost. Is it clear? Parth and Meet, have you understood now? Doubt cleared. Acha, Gaurav also has a doubt. In short, if it is expected that the project will derive benefits, then only it can set as relevant cost. Yes, the cost which help us to derive that revenue directly, that is what? Relevant cost and revenue, they go hand in hand. If a cost is helping us to achieve a revenue, then it will be a relevant cost. If it is not getting incurred, if there is no business, it's not there, right? So that is a relevant cost. So costs which are incurred only if you are doing the business, that will be relevant. And costs which do not care whether or not you run the business, they are irrelevant costs. You will not use it to evaluate your business. I will give you one more example of irrelevant cost. All of this will come on later in the syllabus. Huh? So there is a head office which is in Delhi. And this company has offices in, let us say, Lucknow, it has in Maharashtra, Bombay, it has it in Guwahati, it has in Bangalore. It has got branch offices here. Head office doesn't do anything, it just manages the work of all the branches. But there are people sitting in the head office, electricity bill is getting incurred, rental is being paid for that head office. Now tell me one thing. Head office doesn't earn any revenue. So normally, as per your financial accounting, what you would do, you will allocate the head office cost to each of the branches. Okay, that apportionment of cost will happen. But tell me, if I shut down a particular branch, let us say I'm now shutting down the Bangalore branch of this company, will the head office still incur cost? Will the head office still incur cost? Yes. The people will be managing the other branches now. Let us say they will be managing the Guwahati branch, the Delhi, Lucknow branch, Mumbai branch. 3 branches. So tell me, when I am evaluating the performance of Bangalore branch, will I consider the head office cost allocation as relevant? Think and answer. Head office cost allocation which you are making, will it be a relevant cost for the evaluation of performance of the Bangalore branch? Head office cost will be incurred whether or not you are running the Bangalore branch. How can you say that it is directly attributable to Bangalore branch? No, it is not. So it is an example of irrelevant cost. What could be the relevant cost for Bangalore branch? The electricity bill of Bangalore branch, the rental bill of Bangalore branch, the cost of materials which are being sold in the Bangalore branch office. So all of those will be relevant. But head office cost allocation will not be relevant. Why? Because that will be incurred whether or not I run the Bangalore branch. Okay. So that is the concept of relevant and irrelevant. Let me give the headings here. If business is commenced, if business is not commenced, basis marketing research. Yes, Parth, you are right. And the explanations of Parth is because this head office cost is not contributing to the revenue of Bangalore branch. It is not directly attributable to the business which is being done in the Bangalore branch. Okay. I hope it is now clear. So 25 lakhs will not be considered in the total cost because it is a sunk cost. So we can say that opportunity cost, that cost of land will be relevant. Why is it relevant? Because if I do not start the business, okay, if I'm not starting this business, I will sell it, I will get the money. So if I'm still blocking that land for business, it has got an opportunity cost, because if I'm blocking the land for business, I am not selling it and realizing the 50 lakhs. So it is a loss for me. I hope it is absolutely clear now. If I'm not selling the land and keeping it blocked for business, it is attributable to business only. Yeah. If I would have taken a rational decision and sold it, I would have got 50 lakhs. So that is the cost attribution I will make to business. Clear? So let us come back to the slide. I hope now you read the statements. It will make absolute sense to you. A criticism of traditional management accounting is that they are backward looking. Whatever is incurred, it is my cost. Whereas decision making is a forward and outward looking process. Accounts are based on cost, whereas decision making is concerned with values. Strategic management accountants will use relevant cost, that is incremental cost, which the costs which are getting incurred only if you do something. Incremental cost and opportunity cost for decision making. Very, very important statement. It's going to come handy in later chapters, but I hope now you will remember the concept properly. Okay. So what are the two key attributes of strategic management information? It has external orientation. It looks at what the customer's requirements are. If the customer's preferences are changing, how are the competitors behaving? What are the requirements or needs of suppliers? What do the shareholders expect in terms of the share price? These are all the decisions which are taken by the strategic management officers. And second attribute is that it has a future orientation, that what is the value which is going to come from certain expenditure? What are the relevant costs for that business? That is all done at the strategic management level. Now you will start creating a boundary between financial accounting and management accounting. Management accounting is what is relevant for taking important decisions. Financial accounting is to comply with the financial regulations. Okay. So let's take a small break now. It's 12:30. We'll catch up at about 12:50 and then continue our discussion. Okay. Eat something, refresh yourself, and then come back. We'll see you at 12:50. Hello everyone, welcome back from the break. Let's continue our discussion on strategic management accounting information requirements. So we understood that the two key attributes of strategic management accounting are external orientation and future orientation. Another attribute which is visible in case of strategic management is goal congruence. Extremely important term. You should be remembering this and try to imbibe it in your answers. What does goal congruence mean? Goal congruence. What does the name congruence mean? Then, coming together of two things, like a confluence of rivers coming together. So goal congruence is achieved when individuals or groups in an organization take actions which are in their self-interest. That means my interests, my goals are achieved, and at the same time, those goals are also leading to the achievement of the organizational goals. So individual goals and organizational goals, they merge together due to my activities. That is what goal congruence achieves to do. So goal congruence is achieved when individuals or groups in an organization take actions, my activities, which are in my self-interest and also in the best interest of the organization. That is goal congruence, that my goals
are meeting with the organizational goals because of my activities. That is what the objective should be. Business strategy involves the activities of many different functions, including marketing, production, and human resource management. The strategic management accounting system will require inputs from many areas of the business. So they will understand what each of the areas of the business strives to achieve. And this will help them to develop the organization-wide goals. Now, what are the individual objectives of each of the departments? And then what should be the organizational goals? This helps to ensure goal congruence by translating business activities into the common language for finance. In short, what it means that it is the role of the strategic management, the top level management, that the organizational goals, they are kept in tandem with the individual goals. If there is, a mismatch, then the organization and the divisions, they will start running in different directions. So the organization-wide goal should be reflected in the individual goals of the departments and the team working under it. So what information, so that is about goal congruence. Next topic is what information could strategic management accounting provide? So bearing in mind the need for goal congruence, external orientation, and future orientation, the following are examples of strategic management accounting information. What are they? Let's go through them one by one. Number one is competitors' cost. You will hear this a lot in corporate setups, So each company has its primary competitor. So like when I was working with Pernod Ricard, our primary competitor was McDonald's or United Spirits. So Pernod Ricard is a liquor company, and again, its main competitor was McDonald's. We always use to converse about things like what is the competitor pricing, what is the cost which the competitor is getting, who are its suppliers. That is all business insights. No one will give it to you in public domain. So when you are working together with the business, you get to know about these things. And very, very interesting. Okay. So competitors' costs, what are they? What are the costs which the competitor is incurring? Is it more cost efficient than us? Maybe we are incurring cost in terms of distributor discounts. Okay, like we are giving discounts to the distributors to sell our products, whereas the competitor is not. There could be reasons for it. So what are these competitor costs? How do they compare with ours? Can we beat them? Can we reduce our cost more? Are competitors vulnerable because of their cost structure? Maybe the competitor is doing some mistake. So I'll tell you, here in the context of e-com. So Flipkart and Amazon, they follow a different type of a customer relationship process. So you get a product which you're not satisfied with, and then you reach out to the customer care. So you might find that the approach followed by the two companies are different. Okay, so you might realize that maybe Amazon gives away the refund very easily. Okay, like you raise the request, Amazon gives away the refund for the product that the product is faulty, and that's how it goes, right? Whereas Flipkart might ask you few more questions. So the approach which the customer experience department is following is different in both of them. You will realize that as a customer, you feel that, wow, like I got a faulty product, I'll get a very easy refund. But don't you think there are some people who are, trying to defraud the company like this? They could have done it very easily. Like they would have got a good product, but then they create something of a, visual interpretation. When they're attaching the photos, they might, edit the photos in a way such that the product looks faulty, although it was not. So they upload a few pictures and then they just ask for a refund. Don't you think if you are following a very lenient customer care approach, you will be spending a lot, your cost will become high, right? You're not getting revenue, na? You are incurring cost. You have given a product free of cost to the customer. That's a cost for you. If this happens, don't you think Amazon's P&L structure, is it feasible in the long run? I'm now talking from company's perspective. I'm not talking from a customer perspective. But if Flipkart is asking more questions, so it is able to filter out those deep prodding customers, whose intentions are not right. It will give the refund to the the real the genuine cases in which the customer has didn't receive a good product, good quality product. But so you follow a lenient policy and you follow a strict policy. In the long run, what is sustainable? That also matters, because if you keep on pushing out refunds like that, there will come a time your company will run out of funds. Just giving you a broad view of how things work. These are very important things when you're evaluating a company's performance. These are the loose nuts which you need to tighten. Okay, so this is something which every company looks at. What is the competitor doing? How much cost are they incurring? What is the policy they are following? This information is looked at the strategic level. At the top, people will track these things. Next, information which is provided by strategy management accounting is financial effect of competitor response. How might competitors respond to our strategy? So I'll tell you something again. Here is an example. So festive dates, I was telling you about the Big Billion Day sale and the Great Indian Festival. So Big Billion Day is by Flipkart and the Great Indian Festival is by Amazon. You will see most of the times their dates will be similar. They keep the biggest event of the year on almost the same date. Is it possible? Is it a coincidence that both of them know that this is the best date to start a sale? Like exactly the same date. So 4th of September, for example, that is the best date to start a sale, and both of them decide on the same date. It doesn't happen like that. Sometimes Flipkart declares its date first, that we are going to start a festival on 4th, and Amazon says, then later on Amazon comes. And in some situation, Amazon declares its dates first and then Flipkart follows suit. So how might competitors respond to our strategy? So I started off with a strategy that yes, 4th seems to be the best day to start the sale. So Flipkart, and then looking at that, even Amazon starts to do it. So this goes on between the competitors. They follow this. How could their responses affect our sales or margins? Okay. So for example, now as Flipkart has started giving you examples, okay? Flipkart has started giving higher commission to its sellers. Don't you think all the sellers will now come flocking to Flipkart? Then Amazon will also react. Amazon will also increase the commission for the sellers. So this is what competitors' response is. You do something, then the competitor also does something to counter its effect. That is what the second point is. This information is again tracked at the leadership level. Next is product profitability. A firm should not only want to know the profits or losses that they are making by each of its products, but also why one product should be making good profits compared to another equally good product which might be making a loss. So in Flipkart, let's say, since we're talking about e-com here, a company might have different divisions. Okay, let's talk about another company. Let's talk about Hindustan Unilever. So HUL, it has got multiple products. It is there in the FMCG segment. It is more or less it is an FMCG company. Within FMCG also there's a lot of bifurcations. Be it in the bathing segment, be it the food segment. So they will track the profitability at a product level, not just at the overall company level, but also at the product level. What is the profit which this product is generating? What is the shampoo range producing? What is the body wash segment generating? What is the profit? So they will track it at the product level, and then they will compare it with the competitors. So this all broad work happens at the leadership level. You're tracking the profits at product level, so you understand what is working well for this product. How can you implement it in the other product?
so that overall profitability of the company increases. Okay. Next is customer profitability. Each company has its top 5, top 20 customers. So they monitor them very closely, that how is this group of customer performing. So some customers or group of customers are worth more than the others, and it is true in every company, be it small, be it big. Each company has its favorite set of customers. That when this customer comes, they will just give me the maximum sales. So that type of analysis and decision making is done at the leadership level, to identify and to keep these set of customers happy. So this is provided by management accounting. Next is pricing decisions. Pricing decisions is accounting information can help to analyze how profits and cash flows will vary according to price and prospective demand. So I was telling you example of Pernod Ricard and McDonald's, right? So here there is a lot of liquor range, right? There is this luxury brands, then there is these premier brands. So there is segmentation done in the liquor industry. And for the luxury segment, if I have XYZ products, okay, and then McDonald's also has products in the same segment, how is my pricing compared versus to what McDonald's pricing is? So you do that comparison, pricing decisions, and then you decide what your price should be. What is the least possible you can offer that you achieve the desired profits also? Okay. The pricing decisions, how will you take those decisions? Looking at what the competitor is doing. What are your financial accounts saying? Just because the competitor is selling a certain product at 1,000 rupees doesn't mean you will also sell your product at 1,000 rupees. Your cost might be higher. You might be offering a better quality product. So you cannot just depend on competitor. You have to be looking internally also what your financial accounts are saying. Yes. So that is a pricing decision. Pricing decision is also taken at a broad leadership level. Next is value of market share. So as I gave you an example earlier also, what is in strategic management accounting, you will be seeing what is your share in the market. Is it 10%? Is it 20%? 50%? Are you the market leader? Okay. Next is capacity expansion. So if you are getting certain demand which is going unmet, that you are not able to meet up to the demand which you're getting, then you need to decide on expanding the capacity of your firm. How much should you expand? That will be a decision taken up at leadership level. Example. So at the current capacity, you are supplying 10,000 tons of steel. But the demand which you are getting is for 12,000 tons. What will you do? You will see whether or not you should expand, because expansion will involve certain costs. So if this extra demand of 2,000 tons comes, then what is the extra profit I will be making? This type of decision making will happen at the senior leadership position. Next, brand value. Companies are heavily invested in their brand value, I'm telling you. Okay. So how much is it worth investing in a brand which customers will choose over competitors' brands? So let me give you one example. Let me search up something I'm thinking. Very good point. I'll take it up part. Let me see if I get a good example to show you.
Hi everybody, Maggie is one of the most iconic brands in the Indian. Hi everybody,
So I've found a good video. It's about Maggie. Okay. So we all know that Maggie is the undisputed leader in the noodles industry. So what makes it that market leader? How is the brand value enhanced through its marketing campaign? Let's see a small video. It's a long one. I will cut it short. Let me show it to you. So I would really suggest you keep yourself aware of, the business outside. It's not just the knowledge within the books. You have to be aware about, business world. What the lead brands are like. What do they do specially? So these types of videos are they're really insightful. So make sure you also like in your free time watch such insightful videos. You'll learn a lot. So you'll learn to implement it in your answers also. Okay, let's watch this. Let me know if you can't see or hear. I'm going to present it now.
Maggie is one of the most iconic brands in the Indian business history. And for our generation, it's even more special because it has been an integral part of our childhood. But from the business standpoint, the most fascinating thing about Maggie is that way back in 1983, both Maggie and instant noodles were completely alien to the Indian culture. And yet, Nestle single-handedly created a 937 crore market and has been a market leader in the domain for 38 years. And in spite of giant rivals like ITC, Marico and Unilever, even today, Maggie has a whooping 60% market share in the instant noodle segment. The question is, how did Nestle create a market for a seemingly alien dish in India? How did it almost establish a monopoly in the instant noodles market? And what are the lessons that we need to learn from Nestle's genius marketing strategy? This episode is brought to you by Navi Health Insurance, but more on this at the end of the video. This is a story that dates back to 1950s Japan. During that time, the country was still recovering from the downfall of World War II. So noodles was one of the most affordable foods in the market. But because the demand was too high and it took a lot of time to be prepared, it resulted into long lines and long wait times. This is when a curious Japanese man named Momofuku Ando decided to make a type of noodles that could be prepared quickly and cheaply. And after hundreds of iterations, he was finally successful in making a revolutionary product that we all know today as the instant ramen noodles. Now, although his newly invented instant ramen did not debut until 1958, the instant ramen noodles became a game-changing business during the economic boom in Japan. And as the country started developing rapidly, the instant ramen became such a big hit that in spite of costing 6 times more than the conventional noodles, the Japanese still bought instant ramen in large quantities. And soon enough, the instant ramen product started traveling abroad to the US to again become a massive hit. And even today, the parent company of ramen, Nissin, accounts for 50% of the billion-dollar instant noodle market in Japan. And while all of this was happening, Nestle was carefully observing the market and realized that instant noodles is a goldmine product in Japan. But very cleverly, Nestle chose not to pursue the Japanese market in spite of knowing that there was $1 billion worth of market share still left to be capitalized in Japan. The question is, when there was a clear market for a scalable product, that too in a booming economy, why did Nestle not enter the Japanese market? Now there are two seemingly logical reasons for that. Number one, Japan was not so liberal, hence it would have been very difficult to operate as a foreign company in Japan. And secondly, why go on war against a monopoly when you can create your own monopoly, right? Well, that is why Nestle started exploring every other market except Japan to create a market for instant noodles. And one of the biggest markets obviously was India. And that is how, ladies and gentlemen, Nestle entered the Indian market in 1983. And like I said before, both the concept of instant noodles and the Maggi brand was completely alien to us. We were still a closed country with hardly any foreign companies in the market, and the Western influence over us was relatively very less. It's almost like asking our parents to eat lasagna every single day. Then the question is, how did Nestle turn Maggi into such an integral part of our lives? Well, that is because Nestle very clearly understood both its customer and the consumers. To tell you about it, if you look at instant noodles as a product, anyone and everyone could have noodles, right? It really doesn't matter whether it is a school kid or a 40-year-old man. And noodles by default is one of the most generic dishes in the market. So had it been some ordinary brand, they would have tried to capture the entire 740 million Indian customer base, and they would have tried to sell to every single Indian who could have had noodles. And on the outside, it does seem like an obvious choice, right? Well, Nestle was no ordinary brand, and they understood the fundamental marketing principle that if you try to sell to everyone, you will end up selling to no one. So Nestle's marketing team started finding the best niche profiles to see who could be their ideal target audience. And that is when they carefully picked two categories, and those were mothers and children. Now this begs the question, what was the thinking behind this? Now listen to this very, very carefully. For the adoption of any alien product, it has to meaningfully cater to the pain of the audience and the interest of the audience.
Hi, did you have some time to answer it? Oh, we just had the most amazing day ever! Nani?
Now in case of Nestle, there were two primary stakeholders. There is the customer and there is the consumer. The consumer is the child who eats Maggie and the customer is the mother who buys Maggie. And during 1983, there were two categories of mothers, working mothers and homemakers. Both of them had one major pain, that is to give their child something tasty and healthy when they come back hungry from school. The problem with working parents was that they were not at home, and with homemakers, after running all morning, after sending the kids and husbands to school and work, they needed some time to rest before they could start working again for dinner. On top of that, the child had just eaten chapati bhaji in school, so giving them the same for evening snack would not be good enough. And at the same time, they needed to make something that was less tedious, but at the same time was tasty enough for the child to eat. So the two pains over here are, working mothers wanted something that the children could make themselves, and homemakers wanted something less tiring to make for their kids. And the interest was obviously a tasty dish for the child to eat. And this is where, ladies and gentlemen, Maggie became an opportunist and positioned itself as the perfect solution for mothers, as a super easy and a tasty meal alternative for their children. This is how the tagline "Do Minute by Maggie" was born. And as we've seen in the commercial, it showcases an act of mother preparing Maggie for the kids only to see them happy and delighted by the taste. Apart from that, Nestle reached out to school kids, sponsored quizzes and events, and even gave them a free hamper of Maggie products. This was followed by a widespread sampling with over 4 million new contacts every year. And as time passed, Nestle even began advertising on TV channels during peak times when people like you and me were watching Power Rangers, Dragon Ball Z and Ninja Hattori. This is how, by positioning itself accurately to cater to the pain and interest of both its consumers and customers, Maggie established itself as an integral part of our lives. Now the question is, if Maggie could establish a name in the market, so could others, right? Because there are already other big guns like ITC, Unilever and Nissin. Then the question is, why couldn't they compete with Maggie? Well, there are three specific reasons for that. Number one, Nestle had evolved its supply chain for 25 long years, which was next to impossible to replicate. And on top of that, it controlled the supply chain end to end. But when Nissin, the parent company of ramen, tried to enter the market, it struggled to find national distribution partners, and its alliances with both Hindustan Unilever and Marico to solve this problem completely failed. Secondly, Nestle had achieved an unmatched level of penetration even in Tier 3 and Tier 4 cities of India. And more people knew the term Maggie than they knew about the actual product, that is instant noodles. So no one really asked for instant noodles, they just asked for a packet of Maggie. This was because since 2005 onwards, the marketers of Nestle conducted exclusive studies and did everything in their capacity to make Maggie accessible to the bottom of the pyramid of India. And in technical terms, based on socio-economic status, the Indian audience could be categorized into 7 categories ranging from A1 to A2. The top segment consisted of SEC classes, as in socio-economic classes of A1, A2 and B1. The middle segment was B2 and C, and the bottom segment was D, E1 and A2. For those who do not understand these terminologies, I'll attach a study material for you in the description. So coming back, the top and middle segment was already captured by 2005 through Maggie's conventional marketing efforts. And they saw that the real opportunity was in SEC classes C and D that represented over 40% of the market. And after an extensive study, the first product to be launched was Chotu Maggie, which was priced at just 5 rupees and was aimed at penetrating the lower segment of the market. The communication was carefully designed in local vernacular languages, and the distribution system was intricately designed with strategic wholesalers and redistributors to reach up to 2.2 million outlets all across the country. And because of this extensive effort, the household penetration numbers of Maggi shot up from just 45% to 71% for the C class and from 31% to 62% for SEC classes D and E in just 4 years from 2006 to 2010. This is the reason why when ITC and Unilever entered the market, they found it very difficult to achieve this level of penetration and brand recall value. And lastly, it was the impeccable connect that Maggi had established with its customers. And this is something that does not need any explanation, but a classic demonstration of the same was seen in 2015 when this happened to Maggi.
दिल्ली सरकार ने 15 दिन के लिए मैगी पर बैन लगाने का फैसला किया। शायद ही कोई घर ऐसा हो जहां मैगी न बनती। भरोसा टूट रहा है तो गुस्सा सड़क तक दिखाई दे रहा है। जांच में मैगी के सैंपल में MSG यानी मोनोसोडियम ग्लूटामेट और लेड की मात्रा तय मानकों से ज्यादा निकली। जब मामला सेहत का आया तो लोग जायका भूल गए। 2 मिनट में बनने वाली मैगी के खिलाफ देश भर में लोगों का गुस्सा उबलने लगा।
आज के बाद हम लोग मैगी नहीं खाएंगे।
The middle class trap. Do you see the apartments in the background? Just take a guess.
As soon as this ban happened, Maggi disappeared from the stores for 5 long months and their market share nosedived from 75% to 0% within no time. But you know what, guys? As soon as Maggi came back, they came out with something called We Miss You Too campaign, wherein the brand asked fans to share their stories about how much they missed Maggi on social media. Now you see, this is not some Michael Jordan's Nike product or a revolutionary iPhone that we're talking about. It is just an instant noodle brand expecting fans to share their memories. But as we all saw, it turned out to be one of the most successful campaigns Nestle had ever executed. And fans from all across the country started pouring their love for Maggi. In fact, Snapdeal sold out a whopping 60,000 Maggi welcome kits within 5 minutes of the Maggi flash sale. And hashtags such as Dil Ki Deal with Maggi started trending on Twitter after the sale resumed. This was the extraordinary level of connection that Maggi had established with its audience. And not so surprisingly, it was very difficult for Unilever or Nissin to achieve this level of connection with a player like Maggi in the market. And guess what? By 2017, Maggi was back to the #1 spot in the market with a whopping 60% market share in the instant noodles market. This is the iconic story of the Maggi brand. Now this brings me to the most important part.
So I hope you enjoyed the story. It was so interesting, even like I was so involved in it. You know, how the story of Maggi tells you, how it started off with ramen being in Japan and then it making its own niche in India, with the biggest plunge coming in 2015 when the product was banned. So it has gone a long journey, but still it remains our favorite. I mean, all of you might have got an urge to eat Maggi today. So that's what brand value is about, being so customer centric that a customer relates to it. Use of vernacular language. Now, even you would have seen most of the apps today, even like Flipkart and all, they are using vernacular language. Why is it that? Because they want to attract the customers even from tier 3 and tier 4 cities of the country. So how much is it worth investing in a brand which customers will choose over competitors' brand? I think this video perfectly answered that question. Is Maggi our favorite? Yes, it is. And how much of that connection, how that was built, that was perfectly explained. I hope you enjoyed the video. Right? Next is shareholder wealth. So, again, as also very importantly, let's just come back to the brand value point. These decisions, how whether you should be doing it in the vernacular language, how you are, distributing free samples in schools. All of these types of decisions, marketing campaigns, they are decided at the top level. This is what we want to do. That how list is done at the tactical level. But the broad idea of what we should do to create that brand value for our product, that is all set down. That tone is set at the top. Okay. I hope it's clear to you. Next is shareholder wealth.
So shareholder wealth is, again, people at the top are the most highly responsible people who look after the share price of the company, right? That how the shares perform over time, because this is what the shareholder put their money for, to get appreciation in their wealth. So that is something which is looked out by the strategic management. Next is cash flow. A loss-making company can survive if it has adequate cash resources, but a profitable company cannot survive unless it has sufficient liquidity. I'll give you one example, you tell me. So there is a profit-making company. In books, it is making profit. So it has done a lot of sales. It has incurred some cost, and net on net, it is in profits. Because we prepare our P&L in a accrual concept basis, whatever has accrued during the year, whether or not it is received or paid, that is irrelevant. That is how we prepare our P&L and balance sheet. Now tell me, this profitable company is, giving a long credit to its customers. You take 90 days to pay me, and to its suppliers, it is paying immediately at the time of purchase. Do you think, although it is a profitable company, will it be sustainable in the long run? It has a lot of profitable, it is earning a lot of margin in its sales, but it is giving so much credit to its customer. That credit period is of 90 days. It will not survive. There will come a time it will not even have cash to purchase and then turn it into finished goods. So this is a very important aspect, closely looked out by the strategic management, that how much cash does a company have? A loss-making company can survive if it has adequate cash resources. Most of the startup companies, they are loss-making companies. 98% of the unicorns, I believe, they are into losses. Okay. But still they are running for so long. How does it happen? Because they have adequate cash resources, maybe through, shareholders, maybe through some type of operations which the company carries out, which is generating a lot of cash for them. So a loss-making company can survive if it has cash resources, but even a profit-making company may not survive better if it doesn't have sufficient liquidity. So people at the top manage this, right? And lastly, last 2 points, what information is looked out by the strategic management is effect of acquisitions and mergers. How will a merger affect levels of competition in the industry? Okay. Again, so you would have known that lot of acquisitions have been done by Flipkart, like Myntra, Jibong, ClearTrip. Earlier, PhonePe was there, now it has been demerged. So companies, they acquire good companies, to expand and diversify. So Myntra was a purely lifestyle brand. So Flipkart acquired it. ClearTrip, it is into transportation. So it is diversifying itself. Then Jeeves. Jeeves is a service center company, where when your mobiles get damaged or something, you might go to a service center. No? So they are more or less operated by Jeeves. Obanas, these are the companies. So it acquired Jeeves. So all of these decisions relating to acquisitions and mergers are obviously taken at the top. And that is the level of information which the strategic management accounting should provide. How will the merger affect competition in the industry? Okay, so now ClearTrip becomes a competitor for Make My Trip. Make My Trip is the leader in this travel segment, right? This is how the strategic management thinks, and that this is the information requirement at their level. And last is decision to enter or leave a business area. So what are the barriers to entry or exit? So let us say now Flipkart venturing into planning to enter into a new business area. What is the barriers to entry? Or if I want to exit that business, what are the barriers? Will I be allowed to exit or not? What are the government regulations? How much investment is required to enter the market? So all of these aspects are going to be evaluated. Please let me know if this topic is clear. This is important from practical understanding with all the examples we have discussed. That's very important because no one will ask you to list down these points. It will come as a topic, and then you'll have to understand that information requirement of strategic management has been tested here. This would be the right answer.
Please let me know if you have understood. Any doubts if you have, any views you want to share on the topic, anything at all, let me know please. Is it fine if I move to the next slide? What happened? Where is everyone? Okay, great. Then let's move to the next slide. Next is information for management control. What is management control? Remember from hierarchy, what is management control? Let me show you the hierarchy again. Management control is the middle level management. So here first we have spoken about the information requirements for the strategic management. Now let's talk about the information requirements at the tactical management level. Okay, let's come back. So management control is at the level below strategic planning in Anthony's decision-making hierarchy. While strategic planning is concerned with setting objectives and strategic targets, management control is concerned with decisions about the efficient and effective use of organization's resources to achieve the objectives and targets. See, objectives and targets are being set by the strategic management. You know, what the company wants to do, how it wants to penetrate the different markets, how it is going to tackle the competitor strategy. These all items are decided. But at the ground level, how it is going to be implemented, that is where the role of management control kicks in. It has to ensure whatever allocation of resources happens for the achievement of these objectives, that is done in an efficient and effective manner. The utilization of the resources. Okay. So what are the information requirements for management, middle level management? Features are, they are primarily generated internally. See, strategic management was external orientation, whereas the level of information requirement for middle level management is going to be internal. It embraces the entire organization. So it will concern the entire organization. Okay. Next is summarized at a relatively low level. So for the top management, it is heavily summarized. For the middle level, it is less summarized. Next is routinely collected and disseminated. So the information requirement is routine in case of management, middle level management. Then relevant to the short and medium terms, maybe 3 to 5 years. Often quantitative. Whereas the information requirement for strategic management would be qualitative. What are the competitors' strategy? How are the customers reacting? All of these are qualitative information. Na? Whereas management, middle level management, their information would more or less be quantitative, because their job is to ensure effective and efficient utilization of resources, right? So that is possible in that can be understood in a quantitative manner. They are collected in a standard manner, right? Routinely collected, standardly collected. That's more or less the same, and commonly expressed in money terms, right? Because you are going to, do it in a quantitative manner, so it gets easily to express those things in money form. These are the features of management control information. I hope it is clear, but this one is pretty straightforward. Okay. What are the types of information at this level? So the types are productivity measurements. So if labor are working for 10 hours, how much of the work they are getting done? What is the number of units they are producing? So all of that is a productivity measure. Next, budgetary control of variance analysis reports. So both of them are a part of your syllabus. Budgetary control, that is like you have allocated 1 crore rupees for salary disbursements, for labor, for wages. What is your actually wage payout? So that is budgetary control. Variance analysis, the difference between actual and the plan, that is variance analysis. Cash flow forecast. So you will see all of them are monetary, right? Because we understood that the feature of management account control information is more or less quantitative. You will realize that when you're seeing this. cash flow forecast. People at the top, they're concerned with having a positive cash flow. Now, middle level management, I told you the summarized level will be less. They are preparing forecasts, what the cash flow is going to look like in the next few years. Okay. Next is staffing levels. How many people should be staffed in a department? That level is decided. So the people at the top will say that, we want to get this work done. So to get this work done, how many people need to be employed? That will be decided by the middle management. Okay, the staffing levels. Next is profit results within a particular department of the organization. That's how much profit that department is generating. This is something which will be looked out by the middle management. Labor revenue statistics within a department. Labor revenue meaning for every 1 rupee of labor that you are paying, what is the revenue you are getting out of it? How does that statistics look like over time in a department? And last is short-term purchasing requirements. Okay, that's what is the frequency with which you need to purchase, what is the quantity which you need to purchase. All of these information is necessary at the middle management level. I hope it is clear, very simple, straightforward. If you have any doubts, just let me know quickly. If there is none, we'll move to the next topic, and that is going to talk about operational control. That means the lower level management. Anything from the middle management which you could not understand? Is it all right? Okay, so let us move to the next one. That is information for operational control. Okay. So operational control, it is the lowest tier in Anthony's hierarchy, and it is concerned with ensuring that specific tasks are carried out effectively and efficiently. So let's just understand what is happening. Strategic management decides that we want to venture into a new line of business. That is a decision at the top. Then middle level management will ensure that whatever resources are allocated for venturing into that new line of business, that is properly used. Now they will lay down some processes for it. Who will be following that process? People at the operational level. So these processes, these tasks, that will be carried out ultimately by people at the bottom layer of Anthony's hierarchy, that is operational staff. Now, what are the information requirements of operational control? It is needed for the conduct of day-to-day implementation of plans. See, the plans will be laid down by the middle level management and they will be implementing it, the operational staff. So that is the information needs for them, conduct of day-to-day implementation of plans. Very basic requirements will be there at this level. It will include a lot of transaction data. Transaction level details are relevant. So top management looks at an eagle's eye view. Then middle level management, it gets in a little more detail. Whereas people at the operational level, they should have a hands-on at a transaction level detail, such as data about customer orders, purchase orders, cash receipts and payments, and is likely to have an endogenous meaning internal. People at the top, external orientation, future orientation. People in the middle, internal. People at the bottom, also internal. Operating information must usually be consolidated into totals in management reports before it can be used to prepare management control information. So obviously, people at the bottommost layer of the Anthony's hierarchy, they will be reporting to the middle level management. So they will be doing some consolidations. That summarization will happen at the operational level. Next is the amount of detail provided in information is likely to vary with the purpose for which it is needed, and operational information is likely to go into much more detail than tactical information. Obviously, the level of detail, it just enhances at the bottom level, which in turn will be more detailed than strategic information. Obviously, that's pretty basic, that the level of detailing at the top versus the level of detailing at the bottom detail will be higher. Whereas tactical information for management control is often expressed in money terms, operational information, although quantitative, is expressed in terms of units. What is the number of units we need to manufacture today? How many hours the labor needs to work today? How many quantities of material should be purchased for achieving this desired production? That is the type. So middle level management also works on quantitative data, but it gets expressed in monetary terms. That is what is the value outcome out of that. Whereas people at the bottom, they will not be concerned with monetary terms. They will be concerned with the number of units, the hours, the quantities of raw material, and so on. Okay, that is the information requirement for operational control. Very basic. I hope it is clear. Now comes the most interesting topic. Not most interesting, but relatable topic. For each of the layers of information now, strategic control, management control, and then operational control, what is the information system going to look like? We studied about information system yesterday. So what is the type of information requirement necessary for each layer of Anthony's hierarchy? First, let's understand the different types of information system, and then we are going to allocate them. You yourself will be able to do it. So the first type of information system is transaction processing system. A TPS collects, stores, modifies, and retrieves the transactions of an organization. I called out a very important terminology just a few minutes back. Think about it. An information system which is collecting, storing, modifying, and retrieving the transactions of the organization will be relevant at which level? Strategic, management, or operational? Don't read any further, just the definition box, read it and tell me for which level of information is this information system going to be useful. Be quick. Very good. Because transactional level details are relevant for the operational staff. That's what is written here. TPS are used by operational staff, and data in a TPS is likely to be high frequency and short term. Every purchase order will get punched, every sales order. So it will be, the data in the TPS will get updated at a high frequency, and it will be reflecting in the short term. So, the purchase orders for the last 1 month or the last quarter, like that. There are two main types. Batch transaction processing, which collects data as a group and processes it later, and real-time transaction processing, which involves immediate processing of data. So I'll explain to you with example. So different types of processing are followed by different types of organizations. There is no rule which organization should follow what. The thing is, so if it's a small organization, how will it go? All the purchase and sales which happen during the day, they will be punched at the end of the day by the person responsible for it. He will not keep on punching it real time. This is the sales happening, this is the purchase happening, because it is a small organization. There will be limited number of purchase and sales orders, and they will get punched at the end of the day. Now imagine the same thing for a company of large scale. You can imagine, so first example was of a retail shop. Now you imagine Flipkart in its place. How many number of orders are getting executed by Flipkart in every minute? Can you imagine? And if it decides that it will do batch processing, at the end of the day, it will punch all the orders. Is it a right approach? You yourself will answer this question. So level of the company decides whether it can follow batch transaction processing or real time. In Flipkart, you see, you place an order, immediately you go to your order section, it will show order placed, order confirmed. So all of that happens in a real time format. Whereas you go to local kirana store, you purchase some dal and rice from there, they will not even enter the details at that time. They will just note it down in a small slip. And then later at the end of the day, or maybe even after a week, they will make all the purchase and sales entries. because the number of transactions are low. So this is how the information, the transaction level details are recorded. It could be done through a batch or it could be done on a real-time basis. I hope you understood with the help of the examples. Now, what are the characteristics of TPS? Again, no need to memorize what are the 4 characteristics of TPS. There will never be a question like that. But you need to know that these are the attributes of TPS, and if a multiple choice question comes and they are giving you an attribute, you should be able to identify that yes, this attribute is of a TPS. Okay, that is the level of awareness you should have. No need to memorize. See, I'm trying to help you by making your life simple. I could have very easily told memorize it. But if it is not relevant, I should not be, pressurizing you into doing it. But be aware of them. It's not like, it will come in the exam and see. If you are not aware of the attributes, if you have not studied them, it will not come to you because the complication of the question might confuse you. So if you are crystal clear in terms of concept, you can relate it with examples, then it will really help you out in exam. So what are the characteristics of TPS? Controlled processing. The processing must support an organization's operation. So basically, it will be in a controlled manner what all things are going to be recorded in that TPS. That's going to be pre-decided. It will support an organization's operations. Next is inflexibility. A TPS wants every transaction to be processed in the same way. All the purchase orders, they will get recorded in the same way, regardless of user or time. If it were flexible, if it would be flexible, there would be too many opportunities for non-standard operations. So I hope you realize that people at the bottom, if they are given a lot of flexibility, the data, it might start becoming useless because they always start following different formats and it will become difficult to collate the information at the management control level. So the data at the bottom level, it is kept standard. They have to follow a certain format for entering the details in the system. Next is, what is the characteristic of TPS? Rapid response. Fast performance is critical. Input must become output in seconds so that customers are not forced to wait. TPS for Flipkart. Every transaction gets reflected immediately on the app. Do you wait? No, you don't. Okay, just give me 1 second, please. I'll be back. Okay, so we were discussing about the characteristics. So that was inflexibility. So you keep it standard for the people at the bottom layer so that the multiple iterations don't get created and the data gets collated in a standard format. Then third is rapid response. So rapid response is fast performance is critical. You cannot ask for you cannot ask for the consumers of that data to wait for you. It should be in a real-time basis. Then next is reliability. Organizations rely heavily on transaction processing systems.
Backup and recovery procedures must be quick and accurate, as failure can potentially stop business, because you know that detailed level will be lost if, for example, your system catches fire. Then all that details will be lost in the fire. So what you should be doing, there should be a proper backup system for the data which is being processed by the TPS. Okay. An example of a TPS in a hotel chain is a booking system. You know, hotels, they will make passenger level booking details, right? They will maintain it. All of that is done in a TPS. That's standard details: name, age, gender, address, ID proof, what have they submitted. So all of that gets recorded in a TPS. Is it okay? So that was about TPS. Let me know if you have any doubts here. If it is clear, then we'll move to the next one. Okay, so let us move to the next one. So this was about TPS relevant for the operational stuff. Next is MIS, Management Information System. Management Information System will be relevant for the management control level, that is the middle management. It generates information for monitoring the performance and maintaining coordination. So the middle management has, you know, dictated what all steps you need to do, what all activities you need to perform. But they'll need to keep a track on it, that how is the performance actually coming out. Who will be doing it? Middle level management. So MIS, which is generating information for monitoring performance, it will be relevant for the management control. Okay. I hope it is clear. So TPS was recording transactions at a transaction level. Management information system, remember this, it helps to monitor the performance and maintain coordination between different departments. Example is purchasing and accounts payable. I'll explain to you how. So MIS, what will it do? You make a purchase order for some material. So that purchase order will be recorded by the TPS. Okay. Then that purchase order will get executed. You will have an incoming material in your go down. All of those details are captured in the TPS because they are recording transactions at the at the transaction level, basically details at the transaction level. Now all of it will get collated. So let us say you have made 1 lakh rupee worth of purchases from one vendor, and that you have recorded. Multiple transactions have been recorded by TPS. So this data will be relevant for 2 departments. Purchase department, because this is the total purchases which have happened from a particular vendor during a month. Total details, summarized details, and also for accounts payable. Can you tell me why? Why will this data be relevant for accounts payable also? You made purchases, you'll have to pay, na? So only if you create liabilities, that is accounts payable, then only you will be paying it off. So there needs to be a coordination between the purchasing department and accounts payable department. What can happen here? If the accounts payable team is not making the payment on time, then what will happen? The vendor will stop supplying its products. Purchasing department will get agitated that because accounts payable is not doing its work on time, I am getting penalized. So there needs to be a proper coordination between different teams, and that is done through MIS. Okay, that is a management information system. Information is extracted from TPS. Like I told you, multiple transactions would have happened and you would have made a purchase of, let us say, 1 lakh rupees from a particular vendor. So information is extracted from TPS and summarized to provide periodic reports for management for structured decision making and control. So this accounts payable, so you realize that you have a payable of 1 lakh rupees now. Then you will check whether you have sufficient cash flow to make this payment or not. Okay, all of this coordination will be possible only through MIS. Am I clear? Please let me know.
That coordination is possible only if you extract the relevant data from TPS and correlate the details of different departments. That is possible only through MIS. What are the characteristics of MIS? It supports structured decisions at operational and management control levels. It reports on existing operations, little analytical capability. There is some analytical capability, but that is very limited. And next is internal focus. So MIS helps you to take structured decisions, that whether you should be paying off the accounts payable today, whether you should lag it for some time, or whether you should make it in advance. Then existing operations, whatever is going on, you make a report, and that will all be in a standard format. Okay. MIS in a hotel chain might help managers to decide on staffing levels. How many people do you need? Maybe for cleaning, maybe for laundry, based on the booking levels. This will be very straightforward. So if you have 10 to 15 persons booking, how many cleaning staff do you need? If you have 15 to 30 bookings, how many staff do you need? If you have 30 to 45 bookings, how many staff do you need? So it can be methodical. It can be standardized. You don't need to think a lot to take this decision. Although it is critical, not everyone will be able to take it. How many people you need to employ them, how to employ them, how to get the necessary number of people. So all of these decisions will be taken at management control level. And what will be the supporting information system at this level? That is known as MIS. Please let me know if it is clear. TPS and MIS. I know it's theoretical, it might seem a little boring. I can't help it. That is the content. I'm trying to give you examples. Please hold on. I hope it is clear. Okay, great. Next is your executive information system. What is an executive information system? It provides generalized computing and communication environment for senior managers to support strategic decisions. So EIS will be relevant for the strategic management because it will provide generalized, computing and communication environment. It will not be having a standard format. Depending on the needs and requirements of the strategic management, the format could be changed. EIS are designed to facilitate senior managers' access to information quickly and effectively in order to analyze organizational performance. They have menu-driven, user-friendly interface. I'll tell you what it means. Okay. So, see, senior managers now, they have limited time. They'll not be, thinking, they'll not even remember where all things are stored, There will be a lot of things. They'll not know where all it is saved and all. So what you need to provide? You need to provide them a ready-made scenario. Like this is the menu. You need to just tick off on this. Click on this, you will get the details of sales. Then you click on this, you will get the geographical details of the sale, from where the sales are coming. You click on this, you will understand the attributes of the customer who are making these purchases. So menu-driven, user-friendly interface. You have to make it simple for them. Otherwise, they'll not be able to, comprehend, because they have a lot of other things to do. They have to take such high-level decisions. They cannot be struggling with their information system. It has to be highly user-friendly. Interactive graphics. I showed you some visualizations in the previous chapter, the data visualizations. So there should be interactive graphics to help visualization of the situation. Next, communication capabilities linking the executives to external database. So if they want to get some external insights, then they can click on necessary things, and that level of communication capability should be there in their information systems. And EIS summarizes and tracks strategically critical information from the MIS and includes data from external sources, example, competitors, legislation, and databases such as routers. So it's like a news agency. So you should be able to get all of the information in a single click. A good way to think about an EIS is to imagine the senior management team in an aircraft cockpit with a instrument panel. So, you would have not actually practically seen it, but maybe in movies, you would have seen how the dashboard of flight looks like. So many buttons are there. They just click and they know how it is there. They can get to take any action that they want to take on the basis of it. So the good way to think about an EIS is to imagine the senior management team in an aircraft cockpit with the instrument panel showing them the status of all key business activities. The dashboards will be there, waterfall, bar diagrams. So it will be very, data appealing. EIS typically involves a lot of data analysis and modeling tools such as what-if analysis. So what if we go ahead with the launch of this product? Then what is the value it creates? What if we do not go ahead? How much have we already spent on this project? So EIS will involve a lot of data analysis and modeling tools. This will help in strategic decision making. Okay. That is about executive information system. EIS in a hotel chain could provide senior managers with images that show key performance indicators. Examples, pie charts showing booking capacity. So booking capacity is, let us say, 100 rooms. Out of that, 80 rooms have been booked. So you could use a pie diagram that 80 rooms are utilized, 20 are unutilized. Or color spectrums showing profitability across the different hotels. So if you are having a hotel chain, what is the profitability of each hotel in that chain? So different color spectrums could be used. That this hotel is highly profitable, so perfect green color. It is less profitable, lighter shades of green, like that. There is a different need for volume of data at each level of the organization. For example, the CEO is not going to be concerned with the detail of every sale. No, every sale will get captured in the TPS. The CEO is definitely not concerned with that, every details of the sale, but is going to require strategic information, including external data represented by EIS, so that they can set strategy for the business. The volume of data decreases the higher you go in the organization. You stop going into the details. So we do a lot of presentations with the leadership. So we know that what all areas they get into. They'll not get into the detailed working which people at the bottom would have done. So as you go high up in the organizational hierarchy, you'll stop going into the details, but you derive information on the basis of what is presented to you. You start taking important decisions. That is the role of the people at the top. And that is the type of information system which should be available to them. Okay. So next is an ERP system. Just give me 1 second. So let's complete this ERP system. What is an ERP system? Enterprise Resource Planning System are modular software packages designed to integrate the key processes in an organization so that a single system can serve the information needs of all the functional areas. Seems a little complicated. I'll tell you with example and then it will become easy. Have you heard about Tally or SAP? I'm sure you would have heard about these software packages. Do you know that they have different modules? They have production modules, they have purchase module, sales module, finance module, payroll modules. So if you are using the licensed version, you will be able to see these modules. Now what happens? These are examples of ERP. So they have different modules which are designed to integrate the key processes in an organization. So what they do, they collect the different data from the different aspects and they integrate it so that one single system can serve the information needs of all the functional areas. Purchase details are getting captured there, and what is the monetary impact that gets captured in the financial books. So it is modular and it is integrating the data so that it becomes handy and useful for all the functional areas.
ERP systems primarily support business operations, those activities in an organization that support the selling process, including order processing, manufacturing, distribution, planning, customer service also. How many customer complaints are we getting? What are the feedback we're getting? So all of that can get captured in SAP, and I'm not sure about Tally, but there are modules in SAP. Human resources, finance, and purchasing. ERP systems help to identify and plan the resources needed to make, account for, and fulfill customer orders by improving the flow of information between business functions within an organization. See, ERP I will not attribute to any one layer of Anthony's hierarchy because it will be useful for all the layers. It's just that the way it is going to report the information that will change. So ERP systems, they are developed in a manner that they integrate the information and the reporting requirement can be modified by the users. So the real-time operation of ERP system ensures that the exact status of everything is always available. You may have heard of the ERP system, SAP. Clear? So what is an ERP system? It collects the data from the different sources, it integrates it and provides relevant and useful data for different levels of hierarchy. Okay, that is about ERP. And the last type of information system which you need to know is the customer relationship management system, or the CRM system. Extremely relevant in the corporate setup today because organizations, they tend to become more and more customer centric. They are concerned about how the customers perceive their company, how they perceive their brand. So having a strong and established CRM system is necessary for the success of the organization. All right. So CRM systems are software applications that specialize in providing information concerning an organization's products, service, and customers. Usually based on a database, these systems offer companies a cost-effective way of offering a personalized service to customers. I'll give you an example here also. See, whenever you make a purchase from online, whenever you make a purchase, you get an email in your inbox that your order has been placed, your order has been shipped, your order is out for delivery. You get all of these emails now. Do you think there is a person sitting there and sending you out these emails? No. It is all automated, and that is possible through a customer relationship management system, that is a CRM system. It captures the interactions of a customer with the organization, and it helps the organization to improve its understanding of the customer. So if you raise a complaint, you get an auto email that your complaint has been registered. So all of this has been managed by CRM. So if you make a call also, it's not just emails. It only like if you make a call to the customer executive, then that also you hear this disclaimer now that your call may be recorded for internal training purposes. What they do, they record the interaction between the executive and the customer. They see what the customer wants, how they can improve their quality by including all of those feedback. So the customer relationship data gets recorded in the CRM system. How many complaints we are getting on a monthly basis, what is the value of the complaints, all of that gets captured in the CRM system. Okay, so I hope it is clear to you. CRM systems extremely useful in this scenario today, whereby organizations want to ensure that they satisfy their customers to the maximum. Okay, so that is about CRM. We'll pause here for the day. We have completed all the different types of information systems. We'll have one activity on the day we start so that it also acts like a revision for you. I hope all of you are able to follow the class. How are you feeling? Can you tell me, like, are you able to understand? Are the examples helping you? Are you able to relate to the examples? What is your initial understanding and feedback from the class? See, because the more open you are, it will help you only, because I'll try to modify my way of teaching to you so that you, because it's for your consumption, you should be able to understand, follow,
The examples should be relatable. So how is it going so far? Is it going fine? The 3 tiers of Anthony's hierarchy. Yes, Shreya, QuickBooks is an example of ERP system. See, QuickBooks is more or less focused on accounting, but they can be modifications with the developer whereby you can add multiple modules to it. So yes, QuickBooks, Tally, all of them, they fall in the same basket. Okay. Rhythm says able to understand very well. Part says, can you summarize Anthony's hierarchy? Okay, let us just quickly look at it. Let's come back. So Anthony's hierarchy, what have we learned? That there are 3 levels of information: strategic, tactical, and operational. The strategic people are the people at the top. Their orientation is forward looking. They look at the future and external looking. And to support their orientation, the MIS is Executive Information System, which is a general dashboard. It is, customized and very user friendly, so that they can drill down to the level of details they want. Okay, that is top. Then comes middle. Middle is your tactical control or management control, whereby they are internal looking, but they derive the data from the operational level. They work on it. They try to coordinate the functioning of the different departments. Like I gave you the example for accounts payable and purchase department. So they are not going in the transaction level details, but an overall monthly, how many purchases were made, what is the total payout that needs to be made, cash flow planning, cash flow forecasts, that will be done at the tactical level. And then comes the operational level, which is dealing with the transaction level details. The people, the executive people who will be working and, recording all this purchase order, sales order. So that is the work at the operational level. So their information requirement is very basic. At the transaction level, very structured way, they will be working. So if you give them scope for, deciding, then there will be a lot of problems. So that is not the approach. We keep them we give them standardized reports and activities to do, which then gets summarized at tactical level, which then further gets summarized at the strategic level. I hope it is clear, Parth. Okay, great. Okay, then let's how to revise these topics. So Meet, I will be, since chapter number 1 is over, I'll be sharing across the notes of introduction slide and chapter number 1 today. And once we complete this second chapter in the next class, which will be on Saturday, 10 o'clock, post that I will share across, because sometimes I might make some changes on the slide when I'm teaching you. So that is why when the chapter gets over, I send across the notes. Okay. So you revise chapter number 1 for the time being. There are no homework questions for this class. We'll wait for a few chapters to get over, then I'll leave it together. Because the questions in the PR Kitna, they're all clubbed together. So it becomes very difficult to just pinpoint just one topic which has already been taught in the class. So let's cover a few chapters, like 2-3 chapters, and then I'll give you the homework questions. And in the meanwhile, please procure the books also, because that will be very important for solving the questions. Okay. So do we have to order? Yeah, you can contact the VGLD team. You'll get the books from there. Okay. So thank you so much for attending the class so patiently. We'll see you next week. Study and take care of yourself. Thank you.